working.
Do you expect that they're going to ultimately need to either figure out AI and have their own LLM, or that they're going to have to buy another one?
I think once we get beyond, that 4 trillion market cap that we're talking about, what's kind of the upside case, what's the optionality? It is ultimately that Apple figures out, I think it's about Siri. How do you make Siri a true AI player in the world that now is dominated by GPT, dominated by Gemini? And Apple should have all the tools to be a real player there with Siri. They've got a multi-billion user install base with their products who use their products literally every day. It'd be easier than any other AI product to just get that into your normal workflow. And so I think to the extent that they can launch a very competent Siri, and the bar I think is low there too because it hasn't been very good, that could be another catalyst. But we're looking at that happening probably more early next year before that becomes a bigger part of the story.
And then finally, in terms of just upgrade cycles, I know you said you thought this was not the cycle. Do you think next year is somehow going to be different?
No, I think next year could be an even bigger cycle for a few reasons. One is getting back to that AI story, right? If they figure out how to make Siri a competent AI assistant, I think that you could see the iPhone 18 cycle be even better than the iPhone 17 cycle because users will hear about a Siri that finally works. They might have an older phone that they're ready to upgrade. And so I think just getting that technology right, getting that software right finally, which they've done nothing with in the iPhone 17, which has been a good cycle already, I think that could be another catalyst as we look at the back half of next year.
Okay. Doug, I want to thank you for joining us this morning. Appreciate it. Meantime, it is coming up on 7 a.m. Right here on the East Coast. We're watching Squawk Box on CNBC. I'm Andrew Ross-Sorkin along with Joe Kernan and Becky Quick. A bunch of things taking place this morning that are important. The price of crude moving higher. We'll show you what's going on if you want to buy it by the barrel. President Trump says that India's prime minister has assured him that the country will ease purchases of Russian oil. Also, the Energy Department announcing plans to buy 1 million barrels of oil to start refilling the nation's emergency supply of crude. WTI at 58.31 right about now. And check out shares of Texas Instruments chipmaker tumbling after forecasting fourth quarter profit and revenue below Wall Street estimates. And Meta forming a $27 billion joint venture agreement with Blue Owl Capital to fund and develop the social media company's Hyperion data center in rural Louisiana. Blue Owl will end up owning 80% of the venture. Meta will own the rest and oversee the construction. It's slated to be completed by 2030, and interestingly, I don't know if you saw this, Blue Owl is going to pay out to Meta about $3 billion in cash. So it's a very interesting transaction, which effectively Meta gets to, move the risk of this whole thing onto Blue Owl. Blue Owl, of course, thinks that there's not much risk because the customer is Meta, and investors, of course,
It's like
want to be part of this because
it's like all the other things we keep talking about, isn't it?
I don't know if this is a circular. This doesn't feel like circular.
But there's novel ways of doing it with things.
Look, this is a lot of money. Nobody wants to be on the line for financing all of it. You got to look for other people to help or other places to help because the amounts of money that are being spent are the equivalent to what you would normally require countries to do. These are the amounts that nations would spend to build out infrastructure. Nobody wants to have it entirely on their balance sheet. And Blue Owl's not taking all of it. It's taking a chunk of it.
They'll own 80% of it, though, in total,
Yeah.
which is an extraordinary amount of a $27 billion deal. Effectively, they're putting in $7 billion cash now. They'll also pay out $3 billion to Meta, so that's $10 billion in right now, and then they'll leverage this up as well.
Yeah, and after all that, the answers are wrong half the time. Hey, I got this new drug I designed for you. This is going to be awesome for you. Oh, sorry, that was for some other disease. This is going to kill you. I mean, we got to get this together quickly. Can we? It's not Six Sigma. 30% is not Six Sigma.
I'm not
Six
as
Sigma
nervous.
is one in...
I'm not as nervous about that piece of it as you are.
Really? Okay.
Why? Because the language models for the
Because humans are going to be involved in this.
Oh, good.
Look, I do think that the large language models have. You're going to have small language models that are more destined to do jobs just like that for the science applications on some of these things too. It's not going to take a broad vacuum of every bit of information that it can.
Grok the other day. So I argue with people on Twitter. So someone say, "Oh, I hope you like your tax cuts, fat boy." And it's like, my tax cuts, my taxes soared under Trump, under that, and I said to Brock, figure this out. Here's X. What happened to those tax? And I was amazed. It took them like 10 minutes. But the assumptions and the research and everything that they did, I don't know why they put property taxes in there, but all they need, it was much easier.
Property taxes are no longer, if you have.
Right. AMT, they had to do all that, but just to prove to some schmo that's obviously not why. Or else I would be a Kamala, I'd be a huge Kamala bro if it was based on my own situation. Checking the futures. Quickly, this morning, futures, flat. But they were flat yesterday, and nothing indicated the day before what we were looking at either.
The Dow was down 100 points when we started at 6 a.m. yesterday. Yeah, so by the end of the
day.
day.
The NASDAQ finally closed lower yesterday, and it's lower again today. Take a look. So is Grok better working than some of the others, or could they all have done that? But I've gotten a similar.
And I like Grok for news.
Grok for news.
Yeah, because it's the Twitter feed is part of.
So you use how many are you using? I've got 3. I've got 2.
Anthropic.
You use Anthropic too.
Yeah, Claude.
Yeah, and it's
Claude. Yeah.
Okay, I only got ChatGPT, Perplexity, and Grok.
Right. I know we're going off piece and off topic.
Well,
You want to hear just something very funny?
Yeah, I do.
I was talking to a lawyer the other
That's
day.
the show off topic.
No, I was talking to a lawyer the other day who was telling me that they had like marked up a contract or something, and then they got an email back from somebody else who said, well, here are the changes from Claude. And he writes back,
Who's Claude?
who's Claude? Did we hire, is there a new associate named Claude?
Yeah.
And of course it was,
Yeah.
I thought that was kind of funny. And it wasn't a joke.
So you need a lawyer. Before, Andrew. What happened?
No, I don't need a lawyer.
You said you were talking to a lawyer.
Yeah, no, I was talking to no. I actually went and spoke about the book to a whole group of lawyers.
You have a motor vehicle or something?
No.
Lawsuit?
No.
Plagiarism?
Not yet. Thanks.
Yeah, exactly. When you need a lawyer,
Yeah,
when you need one,
yeah.
it's good to have a good one. That's all.
Better call Saul.
Exactly. Let's get to Dom too. Better call Dom with a look at this morning's pre-market movers. What do you think, Dom? You got a good one for me?
I have used some of those tools before, but I do have a good morning movers for you guys for this. That's not AI enabled right now. But anyway, let's start with the shares of Hilton on the travel and leisure side. They're moving higher to the tune of 3% after reporting a third quarter beat for profits. Despite declining revenue per available room, a metric known as RevPAR, it's a key measure of financial and operational efficiency. Hilton CEO Chris Nassetta said that he remains confident that RevPAR should improve over the next few years, in part due to declining interest rates. The company raised its full-year profit outlook and its new unit growth outlook after it added more than 24,000 rooms over the course of the quarter and another 33,000 to its development pipeline. So Hilton generally a positive story today, up 3% for those particular shares. Meantime, you got shares of Thermo Fisher Scientific, which are falling to the tune of 4.5% this morning, despite a beat across the board for its third quarter. The company saw growth across all sectors, particularly in its life sciences solutions business, which grew just around 8% on a year-over-year basis. Thermo Fisher will provide guidance on its earnings call, which begins later on today at about 8:30 a.m. Eastern Time, so keep an eye on TMO. And we'll round things out with shares of GE Vernova, which are positive to the tune, well, now just about flat. After a revenue beat in the third quarter and order growth of 55%, it also reaffirmed its guidance, as strong expected growth in its electrification segment helped offset increased expected declines in the wind power business. GE Vernova also just announced yesterday afternoon that it purchased the remaining 50% stake in Prolec GE, which manufactures transformer products. That was previously a joint venture with Xygenics. So GE Vernova shares now down 0.5% on that, Joe. Non-AI Dom, sending this back over to you.
Okay, thank you, Dom.
You got it.
All right.
There's some news just out from the National Hockey League announcing that both Kalshi and Polymarket will be official prediction market partners. The NHL will provide Kalshi and Polymarket with official proprietary data, and the rights to use NHL marks, logos, and official designations on their platforms and products. Both of those platforms have recently entered sports markets, offering customers the ability to buy futures contracts related to the outcome of the games and the league championships. So far, they have not been regulated in the same way as betting companies like FanDuel and DraftKings, which are banned in 40% of the country. The NHL in the past has expressed some concern about what the betting markets will do, but apparently they've worked those concerns out. So they are now official partners. And the CEO of Kalshi is going to join us later this hour, first on CNBC, to talk all about this. Tarek Mansour will get his thoughts on what he's seeing not only with the NHL, but some other issues that have come up recently with prediction markets. We'll talk a lot more about how the prediction markets are growing, what his plans are next. All of that coming up at 7:50 a.m.
After this, former World Bank President David Malpass on the state of the global economy. He's going to be with us in just a little bit. Plus, U.S. Attorney for the Southern District of New York and former SEC Chairman Jay Clayton. We're going to talk about market bubbles and a few other hot topics. That's coming up at 7:30 Eastern Time.
We need to do that. From here on now, we need to. Welcome back to Squawk Box. And join us now to talk about the state of the global economy. Former World Bank President David Malpass. He's now with Purdue University's Mitch Daniels School of Business. It's good to see you.
Good to see you, Joe.
Do you ever get interviewed by Besson? for the, because your name was bandied about at one point, right?
And I wasn't interviewed for the job. I do think, and I've made the point in the Wall Street Journal articles and so on, that the Fed needs to really look at reform. So I was super happy to see Secretary Bessent in both in the Journal and in his International Economy article talking about the reforms. You know, for over 10 years, I've been talking about the problem of QE, that it's not stimulative and it causes this wealth inequality. So you're borrowing on the short end and dumping it into government bonds. How is that going to work out? So he really nailed that in what he was doing in August.
Yeah. Okay, but so you don't know if there. Did you hear wind of your name being bandied? I mean, you heard wind of it, obviously. Do you know if there was any, or there's smoke, there's fire? Would you do it?
So of course I do it. You know, the country really needs leadership across the board, and the Fed, I think, really is, and I've said this, it's part of the deep state. The staff is huge, way too big. They control a lot of markets. I've written a lot over the years about the loss, the cost of losing the interbank market and the Fed funds market. You know, there kind of is a residual Fed funds market, but it's all the Federal Home Loan Bank Board arbitraging the interest rate. It's of no use to growth of the country. So there's so much more that the Fed could be doing to allow markets to function. And that's now this issue on stablecoins. You know, the Fed's really been skeptical of allowing anybody else to be involved in short-term markets. And stablecoin comes in, says we can do it a lot better than what's been doing. And the Fed's really been dragging its feet. So I'm happy to see some talk of this. Chris Waller was out yesterday talking about a skinny master account. I think that's a direction, and the Fed needs to be open to a lot of change.
You could have some really nice digs.
$3 billion worth of
really unbelievable food, I understand too.
I've had really nice digs.
You already got some nice digs. That's not going to do it for you. So you point out you're always trying to urge or influence policy in certain ways. I was struck. You'd like tax cuts in Japan and as well as here. Why?
The world needs more growth. That would be really good for the U.S.
And Japan, and you might get it from this new.
It would be fabulous for the U.S. to have more growth in Japan. So they've got a new government. But what they're looking at, and this is what I worry about across really the world, is institutionalism is deeply embedded. So the central banks don't want to change. The fiscal authorities think that high taxes are in some way going to make their country better. And Japan has a 45% marginal tax rate on personal income. They have a VAT tax. And so if you were living and working in Japan, you'd be disappointed in the outlook, which is what they're showing. But I'll go broader than that. I mean, I think there are opportunities around the world for governments to break out of the mold.
Yeah, and then you sound like a kind of a supply side, or I'm not. Certainly, no.
Let's
Smaller government, ending spending on climate, more energy, more fossil fuels, ending any renewable.
What history shows us on development is the more energy you use, the higher your per capita income. Somehow that got off track, way off track over the last 10 years. So the U.S. is leading in the world, and President Trump is leading on saying we're going to have more energy here. That's necessary for the confrontation with China. I want to come back to taxes. The capital gains taxes in the U.S. are too high. The unrealized gains locked up in the U.S. where people are just waiting for basis step up at death. It's way too much money, and it reduces the dynamism of markets. So my main theme is just that markets all over need more dynamism, and that's why I mentioned the
totally against
market.
That's totally against the pressure, right? To make more, to raise capital gains taxes, right?
Seems like that's the case, right?
Yeah, that's.
Well, let's take a thought experiment. Let's say you lowered the capital gains rate down to 10% right now for 1 year or 2 years. The government would make a giant windfall. They could use that to really build things or to reduce the deficit. That would be wonderful. And what have you lost? The people are going to hold it until death and get zero.
Unless you change that.
So you have to change the state taxes. Don't you think you don't agree with me? I think you have to change the estate tax.
Yeah, but Britain is trying that right now, so that, they say, let's tax the rich people. So what happens? The rich people leave. Washington State is doing that, and it's been a disaster for the state of Washington, because people figure out exactly when they have to leave before
Over the
getting
estate?
caught.
Over the estate.
It's a wealth tax. They have this wealth tax.
Right.
That's a huge deal, that's pushing people out, but leaving a state is different
Different
from
than leaving
losing
a
the
country.
United States. And Britain may be doing this, but
Well,
I would argue that.
I'm
the
just
United
saying,
States
if
is
you
different.
try to tax people's wealth, it'll all of a sudden be somewhere else. It won't be where you can get your hands on it. So you're saying, oh, people are stuck in the U.S.
No, I'm not saying they're stuck in the U.S. I'm just suggesting most people are stuck in the. Actually, I am saying that. Most people are stuck in the U.S. and they want to be here.
Most people want to live in the US.
I don't know if I'm going too far, but when the reconciliation bill passed, the stock market started going up. Why? Because it made the estate tax permanent. And so people could look at it, plan their future, and figure out how to reinvest. And so equities, the minute that you say that there's a lower tax rate, equities go up because they're reflecting growth. And that's an opportunity for the U.S.
If it was really a holiday of 1 or 2 years, though, don't you think it would be extended? And if that's the case, it kind of defeats the purpose.
No, it doesn't defeat. So let's say you get the windfall in the first 2 years, and then people say, this feels so good,
Yeah.
we're gonna make it longer and longer, make it permanent. That's what's happening on the expensing right now of equipment.
Yeah.
So it was originally temporary, and so people met the window, and then they say, wait a minute, now this is really working really well. We're getting growth and jobs out of it. So we need to do lots more of that. I think, and this is what people in markets are talking about all the time. The national debt is just too big, so people won't keep buying dollars. But I don't think that's right. I was happy to see gold down again this morning. It had gotten overdone in its surge and its bubble, and having it come down is more people saying, I want to be in the U.S. at these interest rates. They're just too high. We've got the short-term interest rates at 4.15% from the Fed. Why set them that high? I would like to see a 50 basis point cut in the next meeting, because they should have started cutting in June. They've been delaying the cuts, and so they're not getting ahead of the curve on the cuts. And the bond yields are below 4. So why would you have a short-term rate above a long-term rate at this point in the cycle? It doesn't make any sense. So the Fed's behind the curve. They could catch up and save the government a lot of money, because the government's the big borrower of treasuries.
Right. You're at Purdue. I mean, it's not like you're not doing anything, but you kind of could do something else. If Mamdani calls and wants you as part of his administration, are you willing to serve New York City?
So,
If he's watching, I'm sure he's going to say, this guy's for me.
So
You're like the anti-Mamdani, everything that you want to do.
I love New York, and this city is, one of the most amazing places. Look where we are right now in the studio.
Yeah.
And so people are active, they're alive, they're innovating. So I want the country to do well, New York to do well.
It's important.
Yeah.
As some of the parts.
It's an
New York's one of the
industry.
biggest parts. All right, David, thanks.
Nice to see you.
All right, we're not holding our breath for that. Thanks. A quick programming note. U.S. Trade Representative Jamison Greer will join us at 8:10 a.m. Eastern Time. Yeah.
When we come back, the lost decade for the Manhattan condo market, Robert Frank will bring us some statistics on how many sellers are losing money. Squawk Box returns in just a moment.
Time now for today's Aflac trivia question. According to Investopedia, how much does it cost to achieve the American dream? The answer when Squawk Box returns. The answer to today's Aflac trivia question. According to Investopedia, how much does it cost to achieve the American dream? The answer? $5 million. That would include paying for a home, retirement, kids, a wedding, new cars, health care, and owning pets.
Mortgage rates actually dropped last week to the lowest level in a month. The average contract for a 30-year fixed rate loan fell from 6.42% to 6.37%. The lower rates, though, didn't entice new buyers. Applications for a mortgage to purchase a home actually fell by 5% for the week, but refinance applications jumped by 4%. That was up 81% from the same week a year ago. Today's Inside Wealth Report focuses on the lost decade in Manhattan's condo market. Robert Frank joins us right now with more, and this sounds like a bit of a story you have to tell here. Not just a story, but a pretty concerning one.
It is because, you know, we hear about Manhattan real estate just going up and up and up, and the prices are crazy, and there's this affordability crisis. But in fact, 1/3 of all condo sellers in Manhattan over the past year lost money on their apartments, but it all depends on when they bought, not so much location. So of those who bought before 2010, the median gains they did well were between 29 and 45%. That's according to a new report from Brown Harris Stevens. Now, those who bought after 2010 are likely to see losses or small gains of just a few percent if you add in inflation, renovation costs, transaction costs, which in New York are around 6 to 10%. Those losses for even those slight gainers likely far higher. Now, the purest measure of Manhattan real estate values, which is median price per square foot, has essentially been flat since its last peak in 2016. The low returns may be one reason. Even the wealthy right now are staying on the sidelines and renting. The number of New Yorkers making more than $1 million a year who rent has more than doubled since 2019. Now, brokers say the market right now is headed higher. Median prices have increased for the last 3 quarters. That's the first time that's happened in 3 years. A big question, of course, one we've talked about a lot here on Squawk, is the mayoral election. Signed contracts for luxury apartments in September were down 39%. That may be an aberration, that may be a sign of things to come, we don't know. But for the full story on Manhattan's lost decade in real estate and why the high end is actually the exception in this 10-year rule, you can check out the Inside Wealth newsletter at cnbc.com/insidewealth. That's out tomorrow.
All right, a lot of questions from this. First of all, the condo market versus the co-op market, how big is each and do they reflect the same trend?
Condo market much larger, but they run in parallel in terms of pricing and demand. The condo market tends to be a little bit weaker, so if anything, particularly on the Upper East Side and Upper West Side, where people want new construction, they want new looking apartments, those have probably fared even worse, particularly after 2010.
And when you say the extremely high end has fared better, what are we talking about? What is extremely
This was really fascinating. So if you look at 10 million plus, apartments sold for 10 million plus, that's really the top 4% of the Manhattan market. They have had double-digit gains no matter when they bought. So you bought in 2016, 2020, 2008, they have done well. And that was surprising to me because I see a lot of apartments where somebody pays $46, $70 million for something that I thought they overpaid, especially at the top.
Right.
But there's so much demand, and we've seen this bifurcated economy and luxury continuing to do well in every category, that demand at the very top seems to be immune to the cycles and to what's happening in pricing in the rest of the market, and that's continued.
That September drop is kind of staggering. Is that, it could be a one-off, but how often do you see a one-off like that?
It's been a while. July and August were positive. So if you'd seen a trend, so remember that primary was July 1st, right? Or
right.
that we announced it was. So if you saw a fall off in July and then worse in August, then you would say, okay, we have a trend. July and August were positive. September was down quite a bit.
I think people didn't believe it was.
That's another argument.
You know what it is today on the betting market?
What,
you know what? You see this
80-something%? That's
93.
93.
Donnie.
But the reason for the drop off, Becky, according to brokers, is there's been a big drop in inventory. It's not so much demand. It's that and the reason we haven't had inventory build up is because of high interest rates. Developers aren't building, and that's going to feed into the whole affordability issue, which is just going to get worse.
It's only going to get worse.
Robert, thank you.
Thank you, guys.
Thank you. Coming up, tracking bubbles and avoiding market calamity. We're going to get into all of that and more with U.S. Attorney for the Southern District of New York and former SEC Chairman Jay Clayton. We're going to do that next and later. Airbnb rolling out a series of product updates, new social features. Airbnb CEO Brian Chesky is going to be with us for our first on CNBC interview at 8:30 a.m. Eastern Time this morning. Stay tuned. Welcome back to Squawk Box. Joining us right now is Jay Clayton, who's the U.S. Attorney for the Southern District of New York. He's also, of course, the former SEC Chair. About a million things to talk to you about. You've been focused on markets for most of your life. By the way, you're holding a nice copy there of 1929, so God bless you for that. I'm curious, as you're looking at, and you've just done some crypto cases and some other things that are taking place. How much of your time right now is focused on the markets in this job running the Southern District versus all of the other sort of other crimes in America right now?
Percentage, a quarter, but laser focused on market integrity.
Right.
That is where this office has traditionally had a big impact. It's where the people who work there want to have a big impact. We've had some recent cases, not just in the crypto space, but in the what I would say is in the securitization space, fraud.
Right.
And people should know we're watching. We're watching in the pre-IPO market. We're watching in the markets where pricing is not as transparent. We're watching an area that I'll just say right now that's bothering me. I'm looking at it a lot more closely. Small cap Chinese stocks that are listed, the pump and dump activity that I think I see.
Right.
Bad.
Where are they listed?
Here.
On the NASDAQ?
Yeah. Yeah.
How do you feel about, by the way, in terms of chicanery and fraud, people look at meme coins and sort of pump and dump schemes. There's lots of conversations going on online where people are talking about pushing something up and down. It's sort of done out in the open and sort of not.
Look, I think it's done way too much out in the open. You know that when I was at the SEC, we focused on coins that were securities and people engaging in the type of behavior.
Right, that was happening back then.
I wish that I had this book when I was describing what was going on in the ICO market, that initial coin offering market, because that's exactly what was going on.
Do you think that's still going on right now?
I don't think it's going on as much. Hopefully not.
Right.
We can't have markets that retail folks access where there are forces that are defrauding them on a systematic basis.
Right.
That's just not America. And whether it's a securities or some other wire fraud or what, but systematic fraud against a retail person, that's bad.
I don't think we've talked about this, but you could put your SEC hat on, or you could put your new hat on. The president has talked about this idea of getting rid of quarterly earnings calls and results in that form, doing it just twice a year. You have some people who say this is great. Companies should think more long term. They're spending too much time, too much focus on earnings, trying to either hit their numbers or just focused on the process around it. And then there's other people, including, by the way, Ken Griffin, who's out there saying more transparency is better. You don't want to take away that kind of transparency.
Two things that I would think Ken would agree on, everybody would agree on. Senior management at public companies spends way too much time preparing for quarterly earnings, getting ready. If you look at a really well-run private company, like Ken's company, how much does he spend preparing for an analogous event? And how much time do you have to spend if you're a large cap public company? It might be 10x.
Right.
But the information is probably no different. It's just all of the process that we have added on to quarterly reporting. I don't want the senior management team in a 90-day quarter spending 10 days on reporting.
Right. So here's the question, though.
Maybe two.
But
Let's free up those.
But part of the question becomes then, if you have reporting only twice a year, the argument is that some of the quote-unquote professional investors will ultimately either have more access to corporate management, they'll have more access to information, they'll be buying satellite data and other things that most people can't get access to, and when it comes to either inside information or other types of things, that the market won't know it in the same way. There'll be the companies will sort of stunt the news.
We can't have asymmetric material information. You can't have some market participants knowing how the company's doing between periods and others not. We have plenty of rules to prohibit that. Companies file current reports all the time. They file earnings statements. The real question is, have we gotten into this cycle where one day in time matters so much? If I have a sale on October 29th versus I have it on November 2nd, does that make or miss the quarter and that kind of mentality? The president's absolutely right that that's not the right kind of mentality.
Have you noticed Beyond Meat?
No.
50 cents a couple of days ago. Closed yesterday at $3.62, and it's indicated $7.
And 669 is the.
Yeah, 669. There it is. It's a bid in that, but it's
On news?
no meme. Yeah, news that it's a meme stock.
Yeah.
That's basically. I mean, ever since the pandemic, sales has not. I don't know. We tried it a few times. I think it was. It's P-based, PEA-based. Just to be clear. No, but this is the kind of thing that.
Yeah,
It's a Reddit thing.
Yeah, the meme stock craze and the
It's coming back for you. You have something to do.
Maybe. We'll take a look at it.
But you talk about Chinese penny stocks. That's fun.
Well,
Your work is never done.
the work is never done.
I'm gonna let you.
Vigilance.
He's here.
Well, I have a couple questions.
He's here. Go for it.
Let me ask one New York question. We've been talking about the mayoral race here in New York, and I'm curious. I don't know if you, in your role, are allowed to comment on what you think is not just going to happen, but what the implication of it is for the financial industry and for industry writ large here.
Let me tell you, a long time, New York resident, love the city, I wanted this job that I have because of the impact you can have on the quality of life of New Yorkers. We had the height of big city competence with Mayor Bloomberg. Things worked well. Everything worked well. We have been living off the tailwind of the Bloomberg administration now for a long time. My big worry is, are we going to continue to have a decline in competence in city government? And I think that's what people should be asking themselves. I mean, there are many systems in the city that are not working effectively. One that is, and one that's the most important to me, is the New York Police Department. New York Police Department is not only the best police department in the country, it's the best police department in the world.
Right.
Whoever the mayor is should make sure that the New York Police Department continues to use technology, continues to use crime prevention, and continues to be that gold star. They do more for this city than any institution I can think of.
All right, now,
Okay, so Joe wants the questions.
Well, he's here.
He is.
Okay, so who deserves to be the subject of a grand jury? Does Comey, from what you know about?
You can ask, but I'm not going to comment.
Okay, does it concern you that this looks like, all right, you did lawfare to me, I'm going to do lawfare.
I'm going to back up.
Okay.
What do I think about when I go to work? That people have confidence in the Justice Department.
Okay.
That is, and that's an area where we ought to be focusing. And
So you're concerned then?
I'm concerned I'm not talking about today. I'm concerned over the past period and I've been on all sides of it. I've been subject to investigations, companies that I've been with. I've been defending people against the Justice Department.
Yeah.
We should go to work every day behaving well.
Can I ask you one question? A number of the cases that Joe's referring to, there were people inside the Justice Department that didn't want to bring those cases, or thought that, or said that they didn't think they were appropriate to bring. And then obviously we, as the public, read these headlines about how the head of those, the head of those districts gets replaced by somebody who's obviously close to the president, and then all of a sudden the case is being brought. And I think we're all trying to understand how we're supposed to think about that, and whether that either undermines the credibility of the whole thing or not.
Look, I'm not going to comment on specific cases. That's not appropriate.
That's why I was doing it in sort of general area.
I'm going to ask each one.
But let me say something that I think is important, and that is members of the bar, prestigious members of the bar.
Mm-hmm.
I don't think that they have been. I don't think that the leaders at the bar have scrutinized the Justice Department enough in the prior administration.
Are you saying you think the Justice Department was weaponized?
What I'm saying is, we have very prestigious lawyers who make lots of money and are very smart people, and they stayed silent during the prosecutions of Donald Trump. You did not hear from them.
No. Well, from now on, that's what I said. That's what I deal with every. From now on, we're going to start doing it. No.
That's great. Does that satisfy you?
No.
Let me ask you a different one.
But think about that.
You're just going, what about it?
I mean, I don't want to put words in your mouth.
No, that's what they tell me. I'm doing what about it.
Jay, that's what you're saying. The Justice Department was weaponized in the
But we have the law schools, leaders at the bar, people who know the law. People look to them as leaders, thought leaders, and they stayed silent.
While what was happening?
While the cases against a former president of the United States were proceeding apace.
So where do we wind up with this? Like, do we?
We're gonna do what America does. We're gonna fight our way through it. We're gonna be honest, transparent, and fight our way through it.
But part of the question then is, if each presidency ends up thinking that they're weaponizing against the previous one,
Well, correcting for mistakes.
or arguably correcting for mistakes, but look, like I will tell you, I read the news yesterday about the president, I don't know if it's true, seeking $230 million or whatever it is, and maybe he's going to give it to charity or whatnot. Mm-hmm. My preference, personal preference, would be if he wants to seek an apology or something from the Justice Department. I think that would be fair. I think that asking the money from the taxpayer becomes very, very complicated, because then all of a sudden the taxpayer is on the hook, and they're saying, what's going on here, right? Like, you understand
But
that,
you have your, canvass the American people.
right?
The personal preferences are vast.
You rather it go into solar panels or something, I guess, at the other,
Well-
windmills?
No, I just think it's very
Well,
hard,
I'd
I think it's very
rather
hard for the
go after
president to
people who are
negotiate.
actually perpetrating it.
I just think it's very hard for the president to negotiate with people
Would an apology
who
do
he
it, though?
appointed
But what
for a
if-
settlement like that. And so all of a
So
sudden,
you think he can shake down his own Justice Department because he appointed his?
by default, even if you don't think he can, the perception will be that he can,
Okay.
right? That's,
I get that,
and so that just seems like a bad idea.
especially if he's gonna keep the money, but maybe you use it for some of the gold plating in the ballroom, which you're okay with.
No, that's what he said,
Yeah,
to the ball.
yeah, yeah.
Do you want to talk about the book?
Um,
Or are you tired of the book?
I'm not tired of the book. I love talking about the book.
Are you crazy?
I love talking about the book. The one thing that I'm curious about as it relates to the book is how much you think that the system has more or less guardrails than what was taking place back then.
Much more guardrails, much more transparency.
And do you worry at all about some people?
Market integrity relies on data and
Right.
information. And going back to the earlier point we had,
Right.
like, do you have good data? Do you have good information? Do you know how much leverage is in the market? Do you know liquidity, whether there's liquidity
But
mismatch?
one of the big issues is so much of the market has moved into the private market space, and now we're going to do this sort of quasi-private market, public market thing, where so much of the private market instruments without the same kind of disclosures are now going to be put inside of instruments that will be made available to public retail.
Yeah, there's a point that I think is worth making, and if you look across the crises that we've had, this one
Mhm.
was the credit, the bubble, the effects went deep into the consumer.
Right.
The consumer took themselves out of the game after the crash, and that's what caused the deep.
Mm-hmm.
Same thing in 2008.
Right.
The housing crisis went deep to the consumer. What was done in 2020 when we shut down the economy? We made sure the consumer did not get off the field.
Right.
Now, did we overdo it after that and spend too much? I think the jury has come in, but we kept the consumer. When you're looking at where do we stand and trying to look forward and look for risk, that is one of the variables you really need to look at. But is how much is the consumer exposed
Right.
to the activity that you're worried about, directly or indirectly?
Let me throw one last one at you. Everyone talks about AI.
Mhm.
Talks about AI bubble financing all of these data centers. We talked this morning about this Blue Owl transaction with Meta, effectively Meta offloading a huge amount of the risk to Blue Owl. Interestingly, I think they have 4-year lease deals. They guarantee it for 16 years. I don't know whether you think those are going to be good deals in the end or bad deals, and they're all levered.
Yeah, what's interesting about those, and Torsten has a note out this morning that's very interesting, is that CapEx expenditure in those areas has continued despite higher rates.
Right.
And it's not, because it's rate agnostic.
Interesting.
What it's financed by is the Magnificent Seven. They are financing irrespective of rates, and then the other private lenders are coming along front. It's very interesting, as opposed to CapEx in other areas.
Great.
Thank you, Jake Layden.
Roaring Kitty.
Appreciate it.
Roaring Kitty's watching.
Yeah.
Yep. The Beyond Meat volume is because it was added to the mean ETF and a new contract with Walmart. And he says not because of some Reddit thing. Just so that was.
Then it's on news.
It's on news.
on news.
Walmart among the first national retailers to offer the new Beyond Burger 6-pack. The new Beyond Burger 6-pack.
Right.
So, there was something. But thank you, Roaring Kitty.
Thank you, Jake Layden. Appreciate
Thank you,
it.
Jake.
Congratulations.
Thank you. I really appreciate it. Thank you so much.
All right, when we come back, prediction markets on ice. Kalshi and Polymarket both landing a new partnership with the NHL. Kalshi's CEO will tell us what this could mean for the future of sports betting. That is next, and Squawk Box will be right back. Welcome back, everybody. The NHL is striking an official partnership deal with Kalshi and Polymarket. This is the first major sports league to partner with the prediction market. And joining us right now to talk about it is Tarek Mansour, who is the CEO and co-founder of Kalshi. And Tarek, thank you for joining us this morning. This is a big deal. It's the first of the major sports leagues to actually sign a deal, sign a partnership like this. And I guess I wonder, how did this come about?
Well, I totally agree. You know, this is a big deal. A Big Four league like the NHL signing a partnership with Kalshi is a testament, I think, to our market leadership, our astronomical growth this year, and I would say the golden standard of market integrity and customer protection that we have established over the last few years. So, you know, it is, I think it's a seminal moment for prediction markets and Kalshi because, you know, a league like the NHL partnering with us is a strong sign that prediction markets are here to stay.
There are already people looking at this. The Wall Street Journal wrote this up and suggested that this is a real assault on the sports books like FanDuel and DraftKings. Do you see it the same way?
I don't really think about that in that way. I mean, look, I think there is a business model disruption here, and we've seen it, you know, with, for example, Airbnb and hotels. We've seen it with Uber and taxis. And so when there is fundamental technological disruption, technology that transforms an industry, I mean, there are sometimes critics or dissidents that come about, and that's part of the course. What we're really focused on is, you know, building really good products, building it fast, and improve the market diversity for our customers, which you know we're leading on all three, and we're going to work hard to keep doing that.
There have been challenges because while the sports books are not allowed throughout the nation, you all are being offered right now everywhere in America. There are there are sports contracts in all 50 states, even those that restrict the betting on the standard sports books, and there have been some lawsuits that have come from this, an outcry from the gambling industry groups, legal challenges coming from state regulators, and some senators who are taking up against this as well. How assured are you that this can continue in all 50 of those states?
We're very confident in our regulated structure and our regulated setup. You know, we've worked for years with the CFC to regulate prediction markets and, you know, develop a framework for customer protection and market integrity.
This is a fake Roaring Kitty who has 3.1. I thought it was million. It's thousand, so it's not Roaring Kitty. But what he said is correct.
Okay. Tarek, let's go back to that. This idea that on a federal basis, it has been legalized by the CFTC, but that's not to say that there aren't politics there. If there was a change at the CFTC, that could make it more complicated. How confident are you that this can remain something that you could legally do throughout the country?
Yeah, you know, we are confident and comfortable with our regulatory setup. So we spent years working with the federal government to regulate prediction markets. And, you know, when we think about the announcement today, you know, the NHL deal is really about that. It's essentially a validation of the fact that we have established the right set of customer protection and the right set of market integrity measures to protect our markets, but also the game. You know, to enable this product to thrive in all 50 states. That's why we're seeing the sort of type of customer growth that we're seeing on Kalshi. And, you know, today we're at $1 billion of monthly transaction volume. And so we're excited to see that keep growing.
Yeah, it's been growing rapidly. In fact, Kalshi and Polymarket saw notional trading volume rise above $2 billion for the first time last week, in the week that ended last week. Most of your most popular trading categories at this point are sports, correct? Back in 2024, it was mostly politics. Now in 2025, the last list I saw has something like 1, 2, 3, 4, 5. I think 8 of the top 10 are sports categories, led by the NFL and then secondarily NCAA football.
Look, I mean, I think there's seasonality to prediction markets. So last year, at the end of the year, you know, our most popular category was elections. You know, mid this year, we had a lot of volume around, there's a lot of market volatility, financials and economics, and now we're seeing a lot of volume around sports. It really depends on what's top of mind and what's trending in people's mind and what people have opinions about or what people want to hedge. Actually, this last week, we've seen quite a bit of volume on sports. And you may have seen the announcement from Underdog, who's going to be hedging some of their positions. So leading sportsbook hedging, laying off risk on Kalshi, which is very much the purpose of these markets. But we're also seeing a rise in volume and things around policy. For example, the government shutdown, where we see startups such as Arrived Homes also hedging some of their risk on the government shutdown.
And what is the latest on the government shutdown? What does the prediction market tell you in terms of when this might end?
So we're forecasting 41.5 days, so 42 days for the government shutdown, which would make it the longest in history.
Wow. Tarek, I have to ask you, if the NHL is doing this and this deal has been out there, I assume you're in talks with some of the other major sports leagues as well. Is that a correct assumption?
It is a correct assumption. I think, what we have done here, and this is what's most important, we have set up a framework for us to collaborate with a Big Four league like the NHL, and really they're kind of taking a market leadership position here, and how we develop data sharing to combat fraud, to ensure customer protection, and to preserve market integrity. And I think that same framework that Kalshi has developed with the NHL can be replicated across the other leagues. So be on the lookout for more announcements soon.
And you're paying a licensing fee. Will you tell us what that licensing fee is?
We're not sharing specifics of the deal, but really what we're getting out of this is a little bit of a makeover on the product. So if customers log on to Kalshi today, what they'll see is, we're using the marks. So the product looks a little bit more beautiful than it looked yesterday, and we're very excited about that. And what the NHL is getting is our whole suite of customer protection and market integrity measures that will help them preserve the important integrity of their game.
Tarek, I want to thank you for joining us this morning. We appreciate your time.
Thanks so much for having me.
Tarek Mansour, again, is the CEO of Kalshi, and Squawk Box will be right back. is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, shares of Netflix under pressure, the company missing third quarter profit estimates, citing an ongoing issue with Brazilian tax officials. The stock right now down by about 6.25%. AT&T reporting this morning as well. Those earnings came in a penny above expectations. Revenue was just below the street's expectations. The company is affirming its full-year guidance, and that stock up by 0.75%. And Warner Brothers Discovery reportedly rejecting a nearly $16 billion all-cash offer from Paramount Skydance. Yesterday, the company announced that it was putting itself up for sale after it had said it had multiple unwanted suitors. Not unwanted, but
Yes.
What was the word they used? It was like they didn't go seeking this.
Yes, these were unsolicited.
Unsolicited, thank you. That's the word.
Unsolicited.
All right, let's check the futures this morning. You can see we have now turned barely into the red. The NASDAQ taking the brunt of it so far. For more on the markets, let's get to Mike Santoli. Hey, Mike.
Hey, Joe. Yeah, kind of hesitating here at the index level. The S&P 500 is in this interesting run of 7 straight days where it's been resilient. It's just below the highs, but it's still kind of inside the range that was carved out by that sell-off a week ago Friday. You have it here against the Dow. The Dow actually had a clearer breakout to a new high yesterday, and it reflects a little bit of a shift internally in the market. You know, the last leg of this rally, you see the outperformance of the S&P 500 as the year went on. That's obviously the heavyweights of the Mag 7 and semis and things like that. Also, it's been a lower quality character of leadership going into October with a lot of the junkier, less fundamentally robust companies really leading the way. Some of that has come off the boil. Earnings have helped the Dow a little bit. A lot of offsetting currents there. I would also point out the Dow tends to outperform in weaker markets, so that's when it kind of makes its money. The Dow's kind of a wartime consigliere, I like to say. Now, gold, talk about momentum coming off the boil. This is a feature of what's happening with gold. I have the gold stock index here, along with Buzz. That's a meme stock ETF. It's basically the social sentiment ETF is what they call it. Pretty similar trajectory this year. Obviously, you got a lot of fast money chasing that last leg of the rally in gold. All kinds of rationales, logical ones for why gold has been going up to some degree, but the last acceleration higher clearly created this sort of unstable momentum situation. Now we are unspooling that at least a little bit. Broader macro continues to look like kind of a disinflationary flavor. Look at oil relative to the 10-year Treasury yield on a year-to-date basis. Pretty similar shaped charts, right? This is kind of your explanation in part why you have sub 4% 10-year Treasury, whatever the measured CPI and PCE inflation is going to be. People think, you know, the Fed's going to look through it now, or they're kind of going to tolerate 2 to 3% inflation. And then oil really still has an effect on the long end of the Treasury curve. So that helps when you have this sort of slower job growth, people asking questions about exactly what the path of GDP is, guys.
Very good. All right, you're right, Mike. Thank you.
Okay. Meantime, Galaxy reporting its best quarter in its history. The company generating $29 billion in revenue, driven by a 140% increase in trading volume. Joining us right now in an exclusive interview is Galaxy founder and CEO Mike Novogratz. Good morning to you. Congratulations on the earnings. I know you've been working at this for quite some time, and it's quite something to behold. Yeah. But it's all happening. It's all happening.
Thank you. Yeah, it was a great quarter, and it felt like the 7 years of trying to build trust with our clients and trust in the markets it kind of was emblematic in this quarter.
So help us, though. It's all happening, but it's all happening now against this sort of other backdrop, which is we've watched Bitcoin, oddly enough, drop very recently. And I think we're all trying to understand what's going on, how we should be thinking about that in the context of what's happening with gold, in the context of what we think is happening with equities.
Yeah, listen, crypto had a great start to the year. Post the sell-off, put in highs, Bitcoin got to 125, and we've had a real consolidation since then. The big deleveraging that happened a week ago, that's not good for markets, right? It wiped out a lot of market makers, means less liquidity, and you can see yesterday we were down and then up 4% and then right back down. And so there's a little less liquidity in the market. It took a lot of retail leverage out of the system, and so the good news is we're less leveraged. The bad news is when Humpty Dumpty breaks, he doesn't get put together right away. It takes a few weeks and sometimes months even for markets to heal itself and regain narrative and regain momentum. I don't think anything fundamentally has changed in the crypto story. Our government continues to spend way more money than they should. And I think as long as the debasement of fiat currencies goes on, crypto is going to be seen and Bitcoin is going to be seen. But, you know, we're in a rangy, softer range right now. And I don't see what changes that. There's a bill in DC that needs to get passed, hopefully in the next 6 weeks. If that does, I think that'll give crypto a real jolt to the upside. That, and as we get closer, you know, every day we wake up is one day closer to the Fed governor transition. And, you know, my base case is still we get a much more dovish, malleable Fed governor than we've had in the past.
In terms, though, of the sort of upside downside that you see as a trader in Bitcoin right now, how do you think about it? We've had, obviously, all sorts of folks, from Tom Lee and others, who've come on and said by the end of the year we could be at $250,000 for this coin. Obviously, others like Kathy Wood have even more aggressive and optimistic views longer term out. But where are you right this moment?
Yeah, listen, the end of the year is only 2.5 months away, and so there would have to be a heck of a lot of, you know, crazy stuff to really get that kind of momentum. I do think, you know, we should hold 100. You know, 100 or somewhere close to that should be the downside. And on the upside, you know, you don't really accelerate until you take out 125. And so the most likely outlook is we're rangy between, you know, 100 and 120 and 125, unless we take out the top side. We could take out the top side if, you know, the president prematurely makes a move on the Fed, which, you know, they could target that easily by the end of the year. And if this bill gets passed. I mean, those are the two kind of catalysts I see.
Yeah, I wish you wouldn't say it won't go below something, Novogratz.
Yeah, because that usually always does.
No, but, and then I was thinking, I remember I had deja vu, and literally, I think it was at 14,000, and you said it won't go below 10. Do you remember that? I mean, time flies, but and I think but that just shows you what we're talking about for perspective. But
listen, I mean, keep things in perspective. Bitcoin's still a 50 vol asset.
Yeah.
Right, and crypto is like a 60, 70 vol asset class. And so you're to expect big moves in these markets.
Yeah, it could definitely. So you acknowledge it could easily go below 100, and you wouldn't be surprised.
But I don't think it will, just given the buyers we see and where people seem to care.
Mike, I think the other question I would just ask you, you know, in a broader context, as somebody who just trades the market and looks at leverage and debt in the market, some of the private credit stuff. We've been talking about AI bubbles. How much does that matter to what's going on in crypto land right now?
Oh, it matters a lot. Listen, crypto is both a risk asset and it's a safe haven for debasement of currency. And those things can sound like they're at odds with each other, and in days they are. And so I look at the S&P chart today, you know, we're less than 1% away from an acceleration higher, right? And it feels awfully nervy, like, you know. And so many traders I know keep wanting to get short and then they get stopped right back out. Just looking at those charts, it looks like stocks are going to end the year much higher, and that could pull crypto up. But we have more political volatility than I've seen almost ever, right? We have a government shutdown. We have two sides that are having a hard time speaking to each other. We've got a president or an administration who campaigned on the fact that they thought all our institutions were corrupt, and they're kind of gutting those institutions as we speak, and you have the other half of the country who says those institutions are what hold democracy together. And so you've got this political volatility on top of tons of liquidity, on top of an AI story, which is powerful. And, you know, so you can look at all those pieces together, and they make prediction much more difficult. Would it surprise us if in the next 6 months your book prediction comes true, or the next 18 months? No, every single macro trader would say, yeah, of course that happened after the fact. You know, predicting when it happens is a real art.
And I'm not predicting.
That's not his prediction.
That's not my prediction. I promise. I think there's issues that my prediction is we'll
Well,
have something happen.
your book is timed pretty well.
That's because
For
that's
this
when you got
moment.
done.
That's what I got it done, Mike, unfortunately for us. Anyway, we appreciate it, Mike. Congratulations on the earnings, and we hope to talk to you again very, very soon.
Thanks a lot.
Thank you.
I think you're predicting.
I'm not predicting, but I'll take credit if it happens.
I know how things work.
All right, when we come back, U.S. Trade Representative Jamison Greer will join us on U.S.-China tensions. And then Airbnb CEO Brian Chesky on the company's new features and push to implement AI into its platform. Squawk Box will be right back.
U.S. and China tensions continue to escalate. President Trump says he's unsure if a meeting will happen with President Xi on his trip to Asia. Join us now, United States Trade Representative Ambassador Jamison Greer. It's been on, it's been off, been on again, off again. Can you fill us in, Mr. Ambassador, where do we stand right now with the President and his meeting with President Xi?
Well, there's a spot for it on the schedule if it happens. Obviously, it's a mutual decision. It's whether President Xi and President Trump meet together. Obviously, I think it makes sense to talk, especially at a time where there are a lot of measures in place by the Chinese, but we'll see.
Is Secretary Bessett's involved at a slightly lower level too? Is that coming Friday?
So, Secretary Bessett and I, we're leaving today actually to go to Malaysia, and we'll meet with the Chinese on the front end of this whole swing to try to see if there's room to move forward on some of these really difficult issues that have come up due to some new Chinese measures on rare earths.
Can you be? Is it possible for you to tell us exactly what in your view, what happened since the original framework of that deal was announced? And there's conjecture that we did something that made them mad about some export controls that we had, and that's what caused a shot across the bow with the rare earth materials, which is, I mean, that was a pretty a significant move on China's part. They knew exactly what they were doing and how, I don't know what's the word for it. I mean, that was an aggressive move.
It was incredibly aggressive. It was totally disproportional to anything that the U.S., the EU, or Canada, or anybody did. Because remember, these are global measures that the Chinese have put in place to purport to control the movement or export of any item containing certain rare earth from one country to another, right? Even if China's not, one of the parties in the agreement. So in Geneva, we had an agreement where they would limit their rare earth export controls, they'd keep their retaliatory tariffs down, and we would suspend a good portion of our tariffs on the reciprocal tariff. And so we kept our part, we kept that tariff low, and we had very cordial and constructive discussions over the summer. And then again, a couple of weeks ago, the Chinese decided they were just going to go ahead and expand those controls on rare earths again, not on just us, but on the whole world. And now you hear a lot of narratives from the Chinese side of the surrogate saying, well, the Americans have put a lot of controls on us over the past few years, or they put out a new rule that would, to avoid evasion of U.S. export controls that they didn't like, or their fees on ships. So they're trying out a lot of different narratives when the reality is they just want to exert economic control on the world. They started in April with the rare earth magnets. They're using anything else that has happened as a pretext. The reality is we made a promise in May to keep our reciprocal tariff on them at 10%. We kept that promise, and they have not kept theirs.
The president also over the weekend allayed some fears that this is, going back in time and things have happened since then, but he said, look, we're going to be fine, and I don't want to destroy China, and so we see, I don't know whether it's mixed signals or part of the negotiation, but do you feel that there is a mutually beneficial point where the two countries will eventually, where they will arrive, and everything's going to be fine? Do you believe that, Mr. Ambassador?
Well, let me put it this way. There notionally is a good landing zone for the United States and China, where we trade in a way that's more balanced, and we're trading in non-sensitive goods, and where we have a constructive relationship, and we probably have to actively manage that trading relationship. The trading relationship over the past 20 years with them has very much been China has broad and wide access to the U.S. market, and the U.S. has had quite limited access to the Chinese market. Of course they like that deal. They like that setup. We can't live that way anymore, so we need an alternative path. The question is, do the Chinese accept this? Do the Chinese want to do it? The U.S. has always been quite open to the Chinese, and it's really been driven by Chinese policies that exclude U.S. companies and drive overcapacity and overproduction in China. None of that works for the United States.
Ambassador, we have looked at the export of semiconductors, of the best semiconductor chips, as something we don't want to do in terms of allowing China to use them in their military-grade weapons. They may potentially look at rare earths the same way. Is that part of the dialogue, that we would extend additional semiconductor chips to them in order to get access to rare earth minerals?
So the United States and almost all developed countries have had export controls and used them for decades to control the most critical products and manufactured goods. In fact, but it's usually a small fraction. So the United States controls the highest end goods to China and other countries as well. But the vast majority of semiconductors and the related supply chain are allowed for export, or they can be licensed. What the Chinese have done is they have licensed not some super high-tech leading edge thing. What they've done is they have licensed basic inputs, rare earths. They say rare. It's not that they're rare as much as they're just all processed in China. The rare earth technology is something that the United States invented and pioneered in the 60s. So this is more like a basic input. It would be as if the United States indiscriminately and broadly embargoed fertilizer to China or something like that. I mean, this is something that they don't even compare. What the Chinese have done is broad, it's indiscriminate, while the U.S. and other countries, when they do export controls, they're very, very specific, targeted.
Right. Ambassador, I have a philosophical question just about chips and chip speeds and all of that as you think about China. I understand the national security question, but there's this flip side of the argument which the Chancellor Wang of NVIDIA and others have made about sort of creating a platform and sort of trying to own that platform globally, and that unto itself could create more national security. And I'm curious where you land between those two ideas.
Sure. Well, first of all, keep in mind that any company, even a good American company, super competitive, important company like NVIDIA or others, they all have their own economic interests they're doing too, right? And our laws and regulations, they don't always impose on these companies to take into account the national security. So our job as policymakers is to ensure that national security is recognized. I mean, what these companies are saying, that we want to be competitive 100%. We would love for the world to really be using U.S. products. However, we don't want them to be using them to become more competitive and get a technological edge over the United States. I mean, that's our great, our hard power comes from having the technological edge. And if we cede that to other countries, that becomes problematic. But I think that's why we have processes in the U.S. government, interagency processes to examine these new technologies as they develop to determine what should be sold, what should be licensed, what shouldn't be. Is there foreign availability? Like, we don't want to control something that a country can just get from somebody else, or some kind of technology that's broadly available. It doesn't make sense to control that. But that's why there has to be almost a technology-specific analysis in the U.S. government with industry input about what makes sense to control and what makes sense to sell.
When you, just shifting gears a little, when you do speak to the Chinese negotiators, Mr. Ambassador, what happens when you mention soybeans? I mean, they bought so many soybeans over the years, and now it is effectively zero. And I'm not saying that's as egregious as the rare earth move, but I mean, that was deliberate, nasty, and vindictive, sort of, and obviously making a point. Is it possible that that's going to be part of any deal for our farmers, that they start buying again?
Well, they're specifically trying to hurt U.S. farmers. There's no other way to look at it. There's just no other way to look at it. When you talk to them, they'll say, well, the economic conditions aren't right, and you're not as competitive. Everyone knows that U.S. soybean farmers are the most competitive in the world. The main competitor is Brazil. There are differences between the Brazilian beans and the U.S. beans, but overall, U.S. beans, high protein content, they last long in storage. These are exactly the kind of beans that China usually buys because they're good, right? We talk to the Chinese about this frequently, about this. There's also sorghum. Sorghum is an important crop that they typically buy, and they're using to hurt, now they've stopped those sales to hurt U.S. farmers. They've been pretty clear about it. Obviously, the president will raise this. We all raise this with them. They have a bunch of obligations from the Phase 1 agreement in the first term to buy a lot of agricultural goods and manufactured goods. Our sense is they didn't comply with that agreement. So we have unfinished business with the Chinese. We have new business. But listen, President Trump and President Xi have a great relationship. There is a potential landing zone, but it has to be a fair deal, as the president has said.
Do you think at this point that something goes forward, it's all related, with beef in Argentina, that farmers on one side think that they're getting hit, and then ranchers on the other side, oh my God, now we're going to import Argentine beef. Is that in the works?
So I've heard there's been some controversy about that. If you look at my cell phone, you'll see a number of Republican senators and members who are calling about that. So the reality is, every year, we import a lot of beef. We consume about 12 million metric tons of beef a year is the number I'm told. We also import a lot of beef, and we export a lot of beef. And the president's been getting, foreign market access for beef as well. With Argentina, we import some amount from them every year. The president has talked about getting beef prices down. I do not see a world where there's some huge, millions and millions of metric tons flooding into this market. I mean, that's just not part of the program.
Ambassador, can I just go back to the rare earths again, just because it's such a key part of business and military issues here. I realize your point that this is, the basic inputs that go through to it, but we don't have the ability to get those inputs back, even though we developed the mining technology. It didn't work here from about 2002 on, from a capitalist point of view, because China was basically dumping these things for a much lower price on the markets. That's why we lost our mining abilities here in this country. Even if we got it back, though, the hard rare earths are not something that we have geological deposits for here. Obviously, you made some progress with that, with Australia, with the big deal that was signed with them, but how long will it take until we don't have to rely on China for these things?
Well, I'll tell you that already the United States government has been pushing along and investing in projects to help diversify that supply. I've talked before about the stake that was taken in MP Materials, the Mountain Pass mine in California. There are a number of similar projects going on right now within the U.S. government, various departments that have lots of money where they can make it economic for these things to come online. And it's important to remember too, we have a lot of mining and related facilities that exist but have been mothballed for the past 10 or 15 years, back to the time you noted. And so that's a big area of focus right now, is getting those back up and running, so that can be much nearer term. And then there are longer term deposits that we need to explore and develop. And then of course we've been working with our allies too. You mentioned Australia. We have other critical minerals deals coming up with other countries. You know, I talk to my European counterparts almost every day about this issue. So we have very near-term ability to diversify our supply with respect to certain rare earths. Some of them will take longer, but we're moving along at warp speed, as we like to say in the Trump administration.
Great. Ambassador Greer, thanks for your time this morning. We appreciate it. Apparently
The leaf blowers don't care.
yeah, they don't. Do we import how many pounds of beef do we?
Is it 14?
I think
Was that-
metric tons. Apparently half is still in our intestines.
Speak for yourself. Yours, maybe.
Do you know that it stays down there until it's not being digested anymore? It's being putrefaction is what
I don't even know what you're talking about.
People are eating breakfast.
Yeah, and so sausage and stuff. That should be down there till Christmas.
You know, wait about your gut.
It's not that bad. It's only 5. Week 5.
All right, still to come this morning, Airbnb making it easier for users to keep in touch with fellow travelers. We're going to speak to Airbnb CEO Brian Chesky about that and much more. First, though, as we head to a break, let's take a look at this morning's S&P 500 winners and losers. Intuitive Surgical leading the way. It's up by more than 18%. Squawk Box will be right back. flash for you this morning. Shares of Volkswagen are falling in German trading. The automaker warned that there would be temporary production outages because of semiconductor supply chain disruptions. Specifically, it cited China's export restrictions on chips that were made by Nexperia. Nexperia is not a direct Volkswagen supplier, but some parts that it makes are used in the vehicle's components, and that stock down by about 2.25%. I guess that goes directly to what James and Greer was just discussing with us.
Meantime, GE Vernova posting better than expected revenues, also affirming its full-year guidance. Yesterday, the company announced it was purchasing the remaining 50% stake in Prolec GE, which makes transformers. When we come back, a big interview. Airbnb CEO Brian Chesky is going to join us to discuss the company's new features, making it easier for users on that platform to stay connected. And then later, Senator Gene Sheehan on the government shutdown and where negotiations stand. Come right back. Welcome back to Squawk Box. Airbnb rolling out a series of product updates, including some new social features and expansions to its AI-powered customer service tools. We got a lot to talk about. First, right here on CNBC is Brian Chesky, Airbnb co-founder and CEO. It's great to have you.
Thank you very much.
Let's talk first about some of the new products that you're rolling out. What this all means. We talked when you first announced this sort of revamp of the app.
Yeah. So last May, we completely reimagined Airbnb. We imagined, what if you can Airbnb more than Airbnb? We launched services, we launched experiences, and since then, we've been hard at work. We had 65 upgrades, and we launched three things, well, three big ones. Number one, people are telling us when they go on Airbnb experiences, they want to meet other people. And so we thought, what if we built features for people to see who's going? You can keep in touch after, and you can message them. So now experiences are much more social. We made it much easier to find Airbnbs. We've completely revamped our maps. And then finally, with AI, we have AI customer service. Now you can have your problem answered in like 6 seconds. This is really, really hard to solve, AI for customer service. So the team worked really hard on this.
How much are people using some of these new services in terms of, I remember, trying to find somebody who will either cut your hair or do something for you, get your makeup, or all of those kinds of things.
One of the things we learned is you still got to go city by city. Airbnb started in here in New York City. I know Uber, when they launched city by city. So we're really focused on a couple cities, Paris, LA, and it's really, really starting to take off. So I think in the next year, you're gonna see a lot of traction with these products. There's no Amazon for services. People say Amazon's the everything store. It's actually the everything on a cardboard box store. And so we think there's a service platform that can be really big, and experiences, we think that can be a multi-billion-dollar.
Is there a feature where it can guarantee I won't meet anyone from
Services you can have all to yourself.
You can
Every service is totally
you can
yourself.
prevent me from meeting.
Exactly.
Yeah.
I remember when it first happened, I think you and I had a conversation about whether people would use it to find somebody great
Yeah,
and then go
take it
off and try to
service.
create sort of a third party, a one-on-one relationship with them.
Yeah, that can happen in marketplaces because we're travel and the demand and the supply come from different cities and they don't usually go to the same place again. It's not as frequent, but yes, any recurring service in a local market would happen.
Tell me about the AI piece of this right now, because
Yeah, so
that's the conversation everybody's having.
Yeah, well, I mean, obviously, we're pretty knee deep in AI, and we're not deep in the research level. We're deep in application layer, and so basically, customer service is one of the best uses of AI. Now, a lot of people, like with AI, they start with agents. One of the most common ideas is a travel agent.
Right.
We thought instead of helping you plan, let's do the hardest problem. I'm locked out, I have a problem, I need to alter my reservation, I feel unsafe, like the hardest problems. So we've used 13 different models, trained it on tens of thousands of conversations. Our AI customer service agent has handled over 100,000 conversations. It's reduced the need to contact an agent by 15%. So now we're rolling it out globally. Our AI agent is more personalized. We developed a custom interface where it's a user interface where it can take actions for you. So it's really useful.
I will say the first thing I ask whenever I get on one of these chat situations is, am I talking to a real person?
Yes.
Do you answer honestly when?
Yeah. We are very clear about when you're talking to an AI agent.
If I have customer service, I basically want
Yeah, and you can go right to a person very quickly. And the AI is really good at escalating you to the right person very quickly as well.
Okay, that's
Okay, so here's one for you. You have not integrated with your pal Sam Altman's ChatGPT.
Not yet.
So why not?
Funny enough, I was talking to him about this idea, and we talked about integrating different applications. I said, if you want to do this, you need an SDK, software developer kit. And the iPhone, they developed a great software developer kit. I said, we don't all want to just be data layers. We want to be able to have robust services. So I'm very close to Sam. I talked to him. I was aware of the development of this product. And we'd love to be a part of it. The SDK wasn't quite robust enough for the things we want to do. When you join Airbnb, it's not a commodity, it's a community. And they got to develop the SDK a lot more.
What does that mean? That it has to give you more control over it?
Yeah, like when you go to the iPhone, they have this really robust software developer kit, and you can basically create whatever user interface you want. It's really robust. Right now, it's like these little modules, and I think it would be a little bit, it just needs to be a little bit more robust.
Is that because you want to maintain control of your community and not basically share that with anybody else? You'll use their stuff.
Well, that's a separate topic. That's a separate topic, and that's a business decision of just kind of like, do we want to put our inventory on Google, but then does Google disintermediate us? And we chose not to put our inventory on Google search to make it indexable, like through like the hotel finder, we didn't put it there, but we do pay for SEM. So if that's a business question, I think we would probably want to be a part of ChatGPT and other platforms. We just want to make sure. It's almost like you go to a retail store and there's a brand in a retail store. You want to make sure you're not just a product in an aisle, you have your own little
Well, that's what I was going to ask. So, ChatGPT just came out with a new browser.
Yeah.
I don't know if you've been playing with it.
Yeah.
I've been playing with it just in the last
Atlas.
24 hours. It's fascinating, but it could have, ultimately, I would think, it could disintermediate yourself because it's seeing all the things you're browsing all the time.
I'll tell you what
At some point, you're going to hit the chat, and you may never even go to the website.
Yeah, that's a couple things to say. Number one company can't just run the global economy. That's just not going to happen. And so the idea that like one chatbot, one company is going to do everything. Well, let me ask you a question. How come Apple didn't create every app in the App Store? Because one company just can't create Airbnb and Uber and Spotify. There's a lot to build, a lot to do. And if one company did create everything, you're introducing a huge amount of bureaucracy. So we're all going to have to work together. I think AI is going to lift up a lot of companies. And so they can be distribution, but if they want to vertically integrate every single thing, that's going to be very, very difficult. So I don't think it's going to happen.
It would draw the attention of regulators.
Yeah, then beyond the fact that probably regulators don't want one company to own everything. But again, I think we're at the very beginning. And we're also in this period where if you go to the top 50 apps in the App Store, number 1 is Sora, number 2 is ChatGPT, number 3 is Gemini. Those 3 apps are AI apps. Imagine AI is like electricity. Those companies got this magical new technology, they're electrified. Apps 4 through 50 don't yet have it. Over the next 3 years, you're gonna see everyone having it, and everyone's gonna have access to basically the same models because they're all available via API. So suddenly the playing field will start to get a little more level. And over the next 3 years, you're gonna see a lot of consumer apps. Right now, it's like a gold rush. Intelligence is the gold, and everyone's just making picks and shovels. I'm on the board of Y Combinator. Almost every startup's an enterprise company. There's not a lot of consumer companies yet. Daily AI doesn't change the world until it changes the daily life of regular people, and that doesn't happen until most consumer apps are AI.
Okay, so what about the economics of all this? So one of the news stories we've been talking about this morning is Meta is building this $27 billion data center down in Louisiana. They have effectively partnered now with a private credit firm called Blue Owl to try to offset some of the risk for them. They take sort of these short-term 4-year leases. They guarantee some of it, I think, over 16 years. But this is the future of how these things are going to finance. But there's also a lot of leverage in that. Do you think the economics of this make sense? Is there an ROI that you think that people in the Valley can point to, or is this a religion?
I would say this. Will this technology generate trillions of dollars returns? 100% it will. There's no question. I'm looking at how daily life is going to completely change. The more money everyone raises, the sooner they're pulling that timeline up. And it's not going to pay back in just a few years. And the challenge with some of this infrastructure investment is the GPUs depreciate. So the GPUs depreciate, you need to have a payback within that depreciation window. And I think we're pulling the windows up faster the more money we invest. So I think we need to be careful about like excitement turning to euphoria, turning into mania. So I think if it's excitement, we should be feeling good.
Where are we in that?
We're leaving excitement. We might have left excitement.
While we have you here, can you tell us about what's going on just in the travel business, the YOLO economy?
Yeah, I think it's funny. For all the tariffs, for all the instability in the world, people still travel, and a few basis points here and there, currency exchanges change it. I've been shocked the last 6 years with the pandemic, with like wars, with massive change. Like travel's been pretty stable. It's one of the things people don't want to give up. Now travel changes. When the economy changes, people maybe don't do that international trip. But they get in a car and they just still travel.
So, but are you seeing either international trips change? I remember, I think you were one of the first people who were saying there were people who had changed, like where they were going, not just where they were going, the days they were going.
Yeah.
People were leaving places on Thursdays, coming back on Monday nights because they didn't have to go to the office.
Yeah, a lot of people, like over Thanksgiving, people used to go away on like a Wednesday, come back on a Monday, and now they'll go away on that previous Monday. They'll make longer trips. People are doing more near-term destinations. Europe is doing really well over the summer. But trips are longer. People are traveling more with other people, and they're traveling more nearby as well.
Brian Chesky, thank you.
Thank you very much.
Really interesting. Always. Thanks for coming in.
Thank you.
Coming up next, day 22. Now, this afternoon, we're going to speak with Democratic Senator Jeanne Shaheen, New Hampshire Squawk Box. We'll be right back.
President Trump has said that Republicans will not be extorted by giving in to Democrats' demands. This comes as the government shutdown enters day 22. Joining us right now is New Hampshire Democrat Senator Jeanne Shaheen. She has been one of the lead negotiators for the Democrats during the shutdown. And Senator, thank you for being with us this morning.
Nice to be with you. Let me just correct you though. I'm not a lead negotiator because there are no official negotiations going on between Democrats and Republicans, between the White House, between the leadership, between Congress. All of the discussions are member to member based on concerns about how do we provide health care for the millions of Americans who are going to see their prices rise dramatically and those who are going to lose their health insurance, and keep the government open. And that's my goal, is to see how we can do both.
Have you been having conversations with some of your Republican counterparts? Because people have looked at you as somebody who has signaled that with your vote last week to push the defense bill ahead. People thought that was a signal from you that you'd be somebody who would be open to negotiations. Who are you talking to?
Well, I'm talking to a number of my colleagues on the Republican side. I don't want to get into personalities, but I've had good discussions. I think there's a lot of intent on both sides of the aisle to address the problem, because people understand that 76% of the people who are recipients of those tax credits to help them afford their health insurance are people who live in states that President Trump won during the election. 57% of them are in congressional districts that are Republican. So our colleagues on both sides of the aisle understand this is an issue that we need to address.
It's hard from the outside to see how this breaks, how there is movement. From the inside, do you see a path?
Well, I think there are lots of options that we ought to be able to agree to, and it's a matter of a commitment. But again, I think what would help a lot is if the leaders of both the majority and the minority in both houses and the president would sit down and would solve this problem. Because there are a number of different ways to do it that can address both providing affordable health insurance and making sure we keep the government open. And we should be doing that. And I'm disappointed that the president is headed off out of the country again without being willing to sit down and meet with people.
I guess Republicans, Senator, just say that they want to do both. They're two totally unrelated things. We had Senator Ron Johnson on yesterday, and he was imploring individuals like you're not running for re-election. You don't need to listen to whatever it is Chuck Schumer, minority leader, is saying. You like Senator Fetterman, you're in a position where you could, look at what's happening. And in the past, I'm sure you made comments about shutting down the government. Should never happen to try to blackmail another party into doing something. And he was imploring that you are going to lead the way, maybe be the next one to break away from, the monolith of Democrats that aren't supporting this. And then I think he mentioned, or at least someone mentioned that you did vote for a bill that sort of indicated, the defense bill, that indicated maybe you were, I don't know, opening, or at least weakening a little on your resolve to keep voting no. You've done that 10 times on a continuing resolution that's been voted on 13 times before to pass by Democrats.
Well, I don't think this is about what Senator Schumer says or what Senator Thune says. I think this is about how are we going to ensure that the millions of Americans who need health insurance because they can't feel secure in their lives without knowing they can get health care are addressed. President Trump is willing to spend $20 billion to bail out his friends in Argentina, but he's willing to let over 20 million Americans see their insurance costs rise almost double. So I think this is about how we work together to ensure that the issues that are facing Americans are addressed. And health care is critical. I had a meeting with some constituents last Friday when I was in New Hampshire. One was a man who was probably in his early 50s. He was a small business owner. He had cancer. He got his insurance through the marketplace. He said, if I didn't have that insurance through the Affordable Care Act, I would not have gone to the doctor. I would not have gotten my cancer treated, and I would be dead by now. So he was talking about how important it is to be able to continue to afford his health insurance. That's what this fight is about.
Okay, but so if there comes a time when Democrats are back in charge and the Republicans don't like that and don't like something that your party does, you would urge them to shut down the government. You think this is, at this point, it's
No,
fair
in
game?
fact, over the last 4 years during the Biden administration, there was no government shutdown. And there was no government shutdown because people sat down and negotiated.
But from here on out,
Because we knew
it's
there were
okay.
issues that the majority, that the
You wouldn't
Republican Party faced
Right.
that we
Then you
needed
would
to
not
address.
criticize
And I
if
think we
Republicans-
need to negotiate now to address the issues that we
Right.
have, because in order to move this forward in the Senate, it takes Democratic votes. And so we need to be part of those discussions.
So you will not criticize Republicans in the future if they shut down the government because they don't like something Democrats
Listen,
are
I've
doing?
been critical of both Democrats and Republicans in these fights, and I will continue to try and call it like I see it. I think this is an issue where everybody should come to the table, and both sides have been at fault.
Senator, the pressure continues to ramp up. Not only do we have federal employees who aren't being paid, even essential employees who are being asked to come in to work, like the air traffic control. At this point, it's also being noted by many states that money for SNAP, the food benefits package for many Americans, more than 40 million, I think, get some assistance on this. That money is set to run out in most states at the beginning of November. When is there a pressure point that you say this is too much, there's too much other pain that's taking place on ordinary citizens in order to continue to keep the government closed while we negotiate this?
Well, again, that's why I think it's important to come to the table. I am worried about the people in New Hampshire who are going to see their SNAP benefits run out at the end of the month. I'm worried about the people who are receiving WIC food, the mothers and children. And I think we need to, again, encourage our leaders on both sides of the aisle to come to the table and address this issue.
We just had the CEO of Kalshi, the prediction market, on. At this point, they are assuming that it's going to be 42 days that the government stays closed. Does that sound right to you? Does that sound like a tenable situation?
I don't think it's tenable. I didn't think it was tenable on day one, but I think they're guessing. I don't have any idea. They're assuming that nobody's ever going to talk to each other. I hope that's not the case. I think one of the things that I hear from my constituents consistently is, why don't you all sit down and work together to address the challenges that are facing this country? That's what we need. We need to get people out of their partisan positions and to the table to work together to solve this problem.
And you just don't feel that if you open the government and do it through appropriations, you just don't feel that that could be done? It has to be done this way?
Well, I think getting back to appropriations bills is really important, and that's why I voted for the defense bill last week.
Mm-hmm. You also have plans to be introducing several bills today regarding sanctions against Russia. What are those bills, and what's the likelihood anything gets done before things kind of reopen?
Well, those are bills that have already been introduced. We have a business meeting in the Foreign Relations Committee today, and we will take up bills addressing Russia's unprovoked war in Ukraine for the first time in this Congress. And I'm really excited because I think these three bills are going to pass. One would designate Russia as a state sponsor of terrorism because of the way they have kidnapped Ukrainian children and taken them to Russia. It has bipartisan support. One is a bill that would address China's continued funding of Russia's war machine. Again, that has bipartisan support. Senator Cornyn and I are co-sponsoring that legislation. And the third would address the repossessed assets that we are currently holding from Russia and allow us to use some of those dollars to give back to Ukraine so they can continue to fight this war against Russia. Winter's coming. We know they need long-range missiles. We know they need help with their electricity grid because it's going to be a cold winter. So we need to do everything possible to support them, and that's what these three bills are going to help do.
Senator Shaheen, thank you for joining us this morning.
Thank you.
Coming up next, stories making headlines this morning, including a big bet on sports. We'll talk about that and so much more when we come right back. Happening this morning on Squawk Box, U.S. Trade Representative Jameson Greer heading to China for trade negotiations and hoping to work through what he called some difficult issues, including rare earth materials. He also accused China of not keeping its promises. Meantime, AT&T affirming its full-year guidance in this morning's earnings report. Shares are down about 1%. And the National Hockey League has a new deal with prediction market operator Kalshi and Polymarket, and DraftKings getting into the prediction market game as well, buying Railbird.
All right, final check on the markets this morning. I haven't looked recently. It's mixed. The Nasdaq was actually the one average that closed lower yesterday. It's down again this morning. Probably Netflix not helping. Dow indicated up a little bit of oil. Let's look at treasuries. We've seen sub 4% on the 10-year for a couple of days now, and we've seen sub 60 on oil, which I think was up a little bit today, but still 58.24. Make sure that you join us tomorrow. Walk on the Street coming up right now.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Futures pretty solid after the Dow's record high on Tuesday. Busy session of earnings today. AT&T, GE Vernova, Texan, Netflix. Tonight we'll get Tesla and IBM. Our roll-up begins with Netflix. Shares dropping in the pre-market after the streamer does miss because of this tax dispute in Brazil.
Shares of Texas Instruments are also dropping. This on disappointing guidance. The company warns of a slower recovery in the chip industry, or at least certainly what parts it plays in. And keep an eye on gold because it is falling again. This after suffering what was its biggest drop yesterday in more than a decade.
Was it a collapse?
I wouldn't say it was a total collapse, but it collapse perhaps was not such a ill-fitting word, Jim.
The real-time editing continues. We'll begin with Netflix, though. Shares are down in reaction to that earnings miss. Co-CEO Greg Peters summed up the results in the state of the business on last night's call.
But we think the business is very healthy. We feel good about our progress on our key initiatives. We've got also a lot of opportunity ahead of us, but we got a lot of work we need to do to accomplish and fully realize those opportunities. So what's working? We had a good Q3. We had revenue in line with expectations. Our operating income would have exceeded our forecast absent the Brazilian tax matter. We're also seeing good progress against our key priorities. So engagement remains healthy. We achieved record share of TV time in Q3 in both the US and the UK. We recorded our best ad sales quarter ever. We're now on track to more than double ad revenue this year.
So Brazil did kind of ding margins on that quarter.
Yeah, and I think one of the problems is it was just, they claimed it was telegraphed, but you really had to go through a lot of fine print to be able to realize that. I'm going to take the other side of the selling. I thought the quarter was excellent. I think that the engagement is really good. I think advertising is really good. I think what the slate that they have is really good. And what happens is something like this. Okay, you say, listen, I want to sell it. And then Friday, Catherine Bigelow's A House of Dynamite comes out. And then all Monday, we all come in and we talk about House of Dynamite. I just think that to leave this stock with their advertising, with the gaming possibly coming, with them having to say, listen, we don't need any of this stuff with Warner Brothers Discovery. We can do it on our own.
Well, I'm not sure they said that. We'll get to that in a minute because they did not say that.
They don't need to buy anything.
No, they didn't say that either.
Well, okay, they can make, they have their own destiny.
They don't want to buy any linear cable networks.
Okay, well, okay.
That's not part of the deal for Warner Brothers, but let's stay on Netflix.
Okay. Well, I'm just saying that I felt it was a strong quarter.
So what's your spot? Why is it just Brazil that's got the stock off 8%?
Because I think people just said, you know what, this is a beat and raise situation, and they didn't beat and raise. And I come back and I say, very few companies are in control of their own destiny as this company, and they still have a lot of time. Remember, they view it as the clock that is their.
Right. It's just your time of your day. How much time you have in your day is their true competitor.
And they go and they go around and they talk about all the different places that they're developing great stuff. And when they make this stuff, it is the South Korean stuff's very inexpensive, the Mexican stuff's very inexpensive. It doesn't cost them a lot to be able to make really, really good products. And I just find that it's like, let's say it was a technology company. They've got all these new technologies all over the place, and it's just such a great thing to be able to have a returning slate that oh, look at that, they've got The Witcher 4, nobody wants this too, Emily in Paris, which my wife still watches, unbelievable, Squid Game, The Challenge 2, I mean, all these things are franchises. They're franchises. And it's hard to have this many franchises. Disney does not have this many franchises.
Well, that's why they're the clear leader, and they have been for such a period of time. In the Morgan Stanley piece this morning, where they reiterate their overweight, they also talk to your point about technology and talk about how Netflix believes it's well positioned to leverage Gen AI tools, including improving the quality of content discovery and recommendation, empowering creators with new tools, and testing what could be new AI-driven advertising formats, which was interesting. And yesterday, hearing from the CEO of Coke as well, talking about AI in terms of what it may be able to drive for Coca-Cola in terms of ads.
It all started with Mark Zuckerberg. Of course, Amazon has a good ad program, but I read this and I just said, these guys are still, without even being able to target, they are still on the come. And you know what? YouTube is terrific. Okay, and it's made a lot of money for Alphabet. Stay on Netflix, will you, Jim? But I do think that this is an impressive quarter, and those who want to sell it, they should read the conference call, which was incredibly well done. They should read the shareholder note, which was amazing, and they'll realize, you're selling a company that has more franchises than any other company I know that can just print money.
I mean, that's been the strategy from the early days, just this buckshot, just flood them with content. And yesterday, with the price hikes that we got out of HBO Max, or HBO, you can see that the pricing backdrop remains constructive.
Look, the idea of paying more for this if you're hooked on these particular franchises, I don't think anyone would have it. You wouldn't even notice how much you pay to be able to get High School Catfish, David, which is unknown number. High School Catfish, 55 million views. That's more than Counterattack.
What?
High School Catfish?
Yeah, no, right. It's got a lot of views. Yeah, big.
Well, I mean, but you think about it, then you watch these, and you're like, wow, that's pretty interesting. It's pretty interesting. Far more interesting than most of the stuff that I watch. I mean, like Diplomat started last week. Oh, Kerry Russell, I already seen it. No, it's like they brought back Hal. I mean, there's stuff that happens. That's not giving away anything. By the way, HBO, can I just say, Task, I want to pay $21. I'm paying $21.
Task was great.
$21.
Task was great. In fact, we were Sunday night had to watch it, in real time on HBO for the finale. Yeah.
Well, no,
Task was great.
Tremendous.
And yes, the same writer as
This is so
you said.
good.
Yeah.
But anyway, I mean, that's not necessarily why I want to buy Warner Bros. Discovery. That'll be something you talk about.
No, but well, let's move on to that.
Well,
Because you're not done. Well, then make some more points on Netflix.
I think that gaming is huge,
Okay.
and there's a shortage of gaming.
Okay.
And you know what? If I were a Saudi prince, I'd buy this company. They'd never forget.
You buy what?
No, they like the gaming part.
Yes, the Saudis are buying EA.
Yeah, well, that's what it is.
Okay, right, but you said this company, and I
No,
thought
buy
when
the
you're
gaming
saying you're
part.
suggesting the
Buy the gaming
Saudis should
part.
buy
They should buy the
Netflix.
gaming part.
The gaming part.
Yes, they should.
Is it for sale?
No, but money
Okay.
talks. Money, everybody else walks.
You're just hallucinating. You're just making things up as you go
You're saying
along.
there's some scarcity in gaming.
I am
and
saying
that's why it's
scarcity in
driving.
gaming, and the Saudi Arabians love it.
They love
have
gaming.
to pick up the phone, call these guys, and say, "Listen."
I think they got a lot on their plate right now. EA's a pretty big deal.
It is
Like
big.
$50+ billion deal.
But
And they are
I thought I would just
the
introduce
vast
the
majority of the
notion
equity behind it.
of the scarcity value and how brilliant that acquisition is.
Got it. On the call, Ted Sarandos was, as we expected, of course, asked about their interest in Warner Brothers Discovery, which we reported on quite a bit yesterday. That company is now for sale. But remember, if you were a buyer now, the way they've restructured a potential spin, you would not be buying the linear cable networks. They would be spun off at a later date, prior to, though, the close of any transaction. So any of these reports out there that Netflix is not interested in linear cable companies, well, of course they're not. Nobody thought they were, and that's not what's at issue here. So here was the answer, at least from Sarandos, when it came to acquisitions overall.
It's true that historically we've been more builders than buyers. And we think we have plenty of runway for growth without fundamentally changing that playbook. Nothing is a must-have for us to meet the goals that we have for the business. When it comes to M&A opportunities, we look at them and we look at all of them, and we apply the same framework and lens that we look at when we look to invest in a build.
So there it is. It wasn't a no. It certainly wasn't a yes. Will Netflix come to play? And actually, as I've reported, they have expressed interest, along with our parent company Comcast. More on that in a moment. But will they really make a bid here for all of Warner Brothers Discovery? Very much unclear. By the way, what would be potential impediments? Well, one would be on antitrust, if you at least consider it the way we typically would think about antitrust, namely putting number 1 and 3 together in streaming could present a problem for regulators from any competitive basis. That said, it's a different construct these days. A lot of it has to do with what the president thinks, frankly, and I don't know what the president thinks about Netflix at this point. I can't say. I do know that he looks favorably on Larry Ellison, and that does get me to some new reporting, at least, on where things sort of stood before Warner Brothers Discovery made the decision to put itself up for sale, to see what else was out there, to at the very least create a record for shareholders and the board to stand behind if and when they do come back and say yes to Paramount. And frankly, given where Paramount was, I'm a bit surprised, perhaps, that they said no, because I had previously reported 22 to 24 would be sort of the range where they might end up, and they ended up very close to $24 a share, perhaps a little bit shy of it, from what I understand, based on people familiar with the situation, but very close to bidding 24 after starting at 19, making 3 separate bids, the last of which was this one very close to 24. 80% was cash, 20% was stock, and it was rejected for the 3rd time. They got rejected. You know, Jim, that was a big price. 24 for a board to say no, for a stock that came from 12, saying no to that, and then saying, well, we're going to generate a higher stock price with a split that's coming. Maybe, but you got some very aggressive targets there. And when I was doing reporting towards the beginning of sort of Paramount's wooing of Warner Brothers, and I said, what about 24 to a lot of people? They said, man, the board would be smart to accept that. Not the case. David Zaslav and John Malone, my understanding is, both were against, and the board unanimously decided to reject that. But as this process moves along, my question will be, A, is Netflix really there? Will our parent company, Comcast, come? More on that in a moment. And then could there be something unexpected? And Amazon, I think it's unlikely at this juncture. Apple?
No.
Microsoft? So really Comcast, Netflix maybe, and then you probably come back to Paramount, but at least you can tell everybody, we looked, we tried to figure it out, and maybe you get it done at a bit higher than where they last ended.
But my understanding is David Zaslav doesn't want anything less than 27.
Okay.
And there are other buyers out there who conceivably could be flushed out. We know that there's some companies that overpaid for different cable assets before.
Well, and by the way, there are companies that have always overpaid for Warner Brothers Discovery.
Exactly.
AOL. Although it was a great deal for them actually, because they actually got monetized. So AT&T,
right.
And then conceivably as well.
You do have John Stanky on your 10.
I do. I'll ask John whether he's interested. Yeah, no, I'm kidding.
But I do think that Zaslav is, look, he's firm. He's firm on this.
He is, but I'll tell you, 27, I don't know that anybody gets there. If they do, take it, of course. If Netflix is in a position where with their stock trading where it is, they could absolutely mount a bid that on the economics might make a lot of sense. On the antitrust, they might have to offer a decent amount on reverse break and things of that nature to make it worth taking the risk and the time that it would take. And then you come to Comcast, our parent company, and this is where, listen, everybody wants a higher stock price. Everybody's a shareholder, but you know what else? It also is helpful. It's helpful when an opportunity comes along and you want to potentially use your own stock to your advantage. Well, Comcast can't do that because its stock is below $30 a share. Now, it is under levered versus Charter. It's around 2.5 times, I think. Charter's like 3.5 times. Charter did layoffs. You could lever up the balance sheet, but in doing so, are you going to depress the stock price even more? And then, of course, we come back to the president. And I don't know that there's much need to be said more than that, Carl. We know how President Trump feels about Brian Roberts. The only executive he really names, sort of name checks all the time.
He does. In his posts.
Yeah, that's tough.
And he has, of course, special nicknames for the company as well.
Now, it would be a DOJ. It would be a DOJ review, not FCC, because there's no change of control at NBC conceivably, and it would simply be about whether or not the union of Warner and Universal would represent anti-competitive. But the DOJ, you know, they came after AT&T and Warner Brothers.
Right.
Remember that?
Oh,
Took them 2 years to get that done.
Yeah, that was.
You can go to court, but
Play the long game. But I think Zaslav is right to hold him. I really do. Because I think there's some. Look, you just said, look, maybe Netflix is better. Maybe Comcast is a bar. Well, why not just say, listen, here's my price. What's the worst thing? They have to eat crow and sell for 24.
yes. Yes.
Yeah, I mean, I was
Which, by the way,
no,
from
I
the
was
show,
here. You took it to 28, and then you go back 24. Just sad, dishonor. But then people forget.
and then you're doing a whole company deal, which is an easier deal to do than the one that we've been describing here, where you are still planning a spin, but the RemainCo is streaming in studio. You are getting some tax leakage, less than $1 a share, but some. Paramount will tell you we do the whole company. We are a lot better on the regulatory front because we're very close to the president, and that's going to go our way, and we can pay a very strong price. So that's what they would say, largely made up of cash. Again, 80% was the last bid in terms of its component of cash, 20% was stock. So, you know, it may be they do come back to that, but you got a record that says we tried. We tried. We looked at everywhere. We went everywhere.
The idea of getting to 27 without Paramount in there, that's a stretch. Very big stretch. Bridge too far, so to speak.
Perhaps a bridge too far.
Interesting, yeah. Limited number of participants or potential participants. I'm curious, though, in media in general, given all the other trades, AI, housing, energy, is that a place you are interested in playing right now?
Absolutely not. Because I want growth. And this is about market share and conceivably putting together some sort of like Citizen Kane-like product. I'm not there. I mean, look, we can talk about GE Vernova, which was down 10 points at one point, and the world's their oyster. So
yeah, agreed.
I want to be in GE Vernova, not.
By the way, Warner Brothers is going to play out over the next few weeks. Probably Thanksgiving and Christmas will be the key sort of time. So we'll be.
So we'll probably hear about it again.
Yeah, oh yeah.
Meantime, I don't know. I was going to talk about Amazon, but I know it's just.
As we go to break, we'll watch a bunch of other names in the move today. Texan, as Jim mentioned, GE Vernova, Hilton, Vertiv, Mattel. This piece on Oklo in the FT.
Devastating.
When we come back. We got to watch Texan today and the chips. Texas Instruments going to open up at the lowest level since about July, as they suggest the chip recovery is slowing and they do guide light for Q3. We'll get Kramer's Mad Dash countdown to the opening bell and get a final look at the futures after this.
right, let's get to a mad dash for this Wednesday. Something we used to call hump day, of course. We got about, what, 7 minutes or so before we get to an opening bell. We've talked a lot about the ambitions of Oklo.
Yes.
Which is the subject of an FT story this morning as well.
Devastating.
Why?
Why? Because it basically says it's a $20 billion nuclear startup without any revenue, and I think it is being. Sam Altman's involved.
We've known that. That's not a
Sam Altman's
surprise.
involved. He's a backer, and the president likes it. Okay, so now let's take the other side. If you listen to GE Vernova, which is actually the foremost maker of nuclear power, you will find out that this kind of technology is high in the sky. Maybe 2040.
Small nuclear reactors?
Yes, well, they're
2040.
They're particularly great.
We're talking about this thing being late 20s operative, right? Aren't they?
I don't think it's going to happen.
We've had the CEO on many times.
Yeah, okay, so they're going to say that. Okay, everybody's going to say that their nuclear is ready. Everybody. There's only one that's actually building, and that's GE Vernova, because they are nuclear power, wind, not that much anymore, rounding her, and natural gas turbine. And I just think that if you want to bet, this, by the way, had a great quarter. There's hyperscalers all over the place. They're trying to get them in, not just out. Now, what do I think? I think that it's entirely possible they could have something going non-commercially in like 6-7 years.
Oklo.
Yeah, but this thing just went up. If you put it up 500%, it's about maybe 13% shorted. Went on the backs of the shorts, and I just think even if they get it right, okay, it is still going to be not, and this is a term that people have to understand, it's not scale, okay?
Right.
Let's say they get it in 2030. Let's give them every single break in the NRC level. It's not scale, David.
Okay.
GE Vernova makes scale. So I would say let's give them the benefit of the doubt that they can get all the permitting and start building. But it can't be scale. And what you need if you're nuclear power is scale, like Diablo.
But nothing says they can't keep saying the same thing for quite some period of time. How do you hold them?
Oh, then you're investing. The Jordanian year that I'm stuck in here.
Yeah.
I think you sell all these stocks. I think they all should be sold. I think that the main stock.
Anything that's on the come, really? Anything that's yours on the come?
I would sell it. You trim. These companies that have no revenue. Oh, don't. It's time to buy. Is it time to buy Krispy Kreme? Never been better than no one beyond me. Are we like in 2021 again? Is this a way back machine? Let's stop. There are plenty of great companies to invest in. These things, many of these are junk. AST, well, here's what you need to know. When they announce insider selling, thank you, we get it. When they do AST, as we do Rocket, and they do a convert. The converts, David, are so 2020. And by the way, so year 2000.
All right.
I am trying to.
No, that was a great end.
No one listens
Do you
to
ever
me.
just stop?
No one listens
You
to
have
me.
dramatic pauses. You stop. It's a perfect end, and then you just talk again.
And Jazz wants 30.
We got an opening bell. Less than 4 minutes from now. Stay with us.
The pullback in gold continues after its record run. Yesterday, the precious metal fell by almost 6%, marking the worst day since 2013, Jim. We're definitely eyeing 4K. We're not going to get, it does not look like we're going to get a 10th consecutive week higher.
No, and I do want to point out that anything can bounce stuff, which it was down really, really badly. Silver's trying to bounce. But what we're seeing is all of these things are very correlated. The beams are correlated, the quantum stocks are correlated, the nuclear stocks are correlated, the rare metals are all correlated, and they all went down at once. You just have to be careful. One of these goes down big, particularly gold, and you're going to get caught in what I regard as being this vortex of everything going down like it did yesterday. What you want to do when you're in one of these meme stocks, or when you're in one of these stocks that involve the groups that just check to see insider selling, check to see if there are converts being done, check if there's a corporation trying to raise money, and sell that stock yesterday. Let me give you an example. You take a look at Nebius, okay, which is kind of a smaller scale. I'm not Michael Dell, Dell. All right, so they announced a terrific thing today. That's NBIS. They announced a robo-taxi for partnership with Uber. What else? They have an October 26th lockup expiration. That's a big deal. And then you open up the lockup expiration, and everybody who's in gets such a great price. So please be careful. Am I being too cautionary? I'm not being cautionary enough.
No. By the way, there's the opening bell and the CNBC Real-Time Exchange of the big board of Chinese wealth manager Noah. 15 years of the NASDAQ Master Beef, a Hong Kong restaurant group specializing in Taiwanese hot pot. But to your point, Jimmy, we argue about whether or not gold's in collapse. Quantum, in 5 days, is down by a third.
Well, I mean, look, we're just nowhere in terms of, we're here from IBM, and our nutrition actually has commercial, quantum, and the companies that we think of as quantum, most of them never made any money. Most of them have no prospects to make money. Most of them are not going to be anything at scale. If there's going to be quantum, it's probably not anything that people think of, might be Google. But people insist on Rigetti, which is, again, it was a nice piece of insider selling, $2 million just a couple weeks ago. These stocks right here, I've had them on. I've had most of them on.
No, IonQ was $85 on last Thursday or Wednesday.
It's a really interesting, kind of small scale, interesting company involving data and technology whose time might or might not come. And people piled in because they got very excited, and now they're trying to figure out what is exactly IonQ. And is Oculus sitting got bars and it's a stock that I'm about to lose a fortune?
Well, it's both, I think. Yeah.
Yeah. You look at all these, you take a look at Rigetti. See how Rigetti's done over the course of the last year?
Yes, very well. You would have want to own Rigetti.
Look at that. But the time has come and gone. And so you ring the register, will it bounce? Sure, the shorts are in there, they want to cover. But when we have the meme ETF that's back, which, by the way, is the one that's pulling beyond me right now, I get nervous. And at the same time, I've got AST Space Mobile. They do $1 billion convert, 2.25% coupon. People have to recognize that the hedge funds, they buy the convert, they short the common. And they're not common down. That's something you had in 2000. Versus ISRG, which they're running the ISRG machines around the clock. And I like that. That's something tangible. David, I want tangible, okay?
I understand that. All right, well, let's talk about earnings then. How about, I'll give you some tangible. Let's get into the data center and let's talk about Vertiv. Yeah.
Oh, my. Did you see those numbers? Third quarter key messages.
I did. You know what else I saw? I saw the stock was looking up about 8% in the pre-market, and now it's not doing anything.
Oh, well, that's just, okay, well, that's part of the parcel.
By the way, the conference call is not until 11 a.m. Eastern.
Oh, Gio gave a great conference.
I mean, the numbers appear to be strong, Jim.
Well, a lot of people did think that everything that could happen was in the quarter. I think no. I think there's more. Remember, it's Dave Cody's the chairman. He's done a magnificent job. The stock has run. Well, look at Chevrolet. It was down 10, then it was up 10. And then finally it settles, it's only up 3. It's a long deck. It's very early in the day, David.
Yeah, I mean, the Vertiv guide for organic was to 20. Street was already at 19.
Right, so that's why they hyped, the Street got ahead. Well, take a look at Texas Instruments. Okay, the Street got way ahead there. By the way, the Texas Instruments is one of the driest. They do a very dry call, okay? I mean, it's like reading the ingredients on the side of like a tasty cake,
Yeah, I mean, as a proxy for chips, Jim, I mean, how much weight do we put? This is the lowest since May.
IoT, and Micron is more of a proxy these days against DRAM for high bandwidth. Which
IoT being Internet of Things, just so people can follow.
Right, this is not, by the look, I mean, you're right. Seagate, Western Digital, those have been fantastic. Those are more storage. Texas Instruments historically has thrown cold water on everything. I don't know why people own the stock. They have made you feel like a chump since 1983.
When you say that, you don't know why Elliott owns the stock? Because if you recall, the activist investor, the most significant activist we have in our markets, owns a lot of the stock.
Can't be right about everything.
No, you can't. No, you can't.
I listened to an interview yesterday about a guy that owned a consumer product store with the best names, the ones that you want to own. Names like Tylenol.
You're talking about my interview with Jeff Smith, who's on the board of Kenvue, and was obviously was a big owner of Starboard, still an owner of Kenvue.
Well, that was a great interview.
Oh, thanks.
The unluckiest situation in the world.
Yeah, there's nothing you can do about that. That nobody saw that one coming.
How about the J&J Talc International? That was a good gift.
Yeah.
J&J got rid of that, okay? Ever since J&J started talc,
I mean,
go on the talc bar, go on the work man, look at that stock, will you? Same by the way, getting rid of the knees and heads and shoulders, knees and toes. Remember that? We got JK over here, our producer's about to go soon because his wife's about to have a baby, and he'll be learning heads and shoulders, knees and toes. That's about J&J, what they're selling, okay? Versus Stryker and versus Zimmer Biomet. You didn't know that.
He's very appreciative for that quick lesson as he heads off to paternity leave.
Well, yeah, okay. Yeah. How about Amazon being down, despite the fact they have robots galore?
It is down, and by the way, as we pointed out many times, it really is the stark underperformer of the biggest cap. I mean, even Apple's doing better, at up for a little less than 4% for the year. With its recent move up, Apple has now eclipsed the performance of Amazon, which is still, well, let's call it flat for the year 2025 thus far.
It did go up 6 points on the outage.
Yeah. I don't know, Jim, you like Amazon, don't you?
No, I love it.
I mean, by the way, I was listening to halftime yesterday, they were all saying how much they love Amazon.
Nobody were?
Yeah.
Well, all I know about Amazon is that the bet against Jassy has not been a great bet. The bet against Bezos has been a foolish bet. I just think that what happens here is that Amazon Web Services has to re-accelerate. And if they do, everyone will buy them. But David, I come to you and ask you about Anthropic. And is that someone who says, you know what? I don't want to be involved with Amazon Web Services. I want to be with Google Cloud.
Well, there was that. I don't know is the answer.
Right.
Yeah.
We have no data whatsoever on that story.
No, we really don't.
We really sourced.
Anthropic's last round was done at what, $180+ billion value. And there you see, if you are Anthropic or you're OpenAI, you just need to try and get a hold of as much compute as you possibly can. You can't use your own credit rating to do it. You've got to tie yourself up to others. And so that's how you do it. It's the same way with, OpenAI and Oracle. OpenAI is using Oracle's credit, basically, to then help it secure compute to the tune of paying Oracle $60 billion a year for 5 years to access that Oracle will then build. By the way, there's a lot of financing that's got to come into this entire
it's already set up.
Including from private credit. You've seen that deal, for example, the Hyperion deal. I talked about it a lot down in Louisiana for Meta, where Blue Owl is in there, PIMCO is in there for you.
Now, this is where I got my problems at. I come in a rush, I see an opportunity. This is a double bottom.
Because Blue Owl's taking its money, putting it in, and getting Meta credit, and getting a return of 7%.
Meta credit?
Why? Why? Yeah, Meta is the ultimate credit here because you're betting on them using your data centers.
80% interest in the joint venture.
Yeah. Oh, yeah.
Pro rata share of the $27 billion goes to Blue Owl. 80%.
That's
not wise.
Why though? I don't know. Because they're getting paid 6-7% on that a year, and it's Meta. Is Meta going to go out of business?
That's good credit.
So why wouldn't that be a good credit? And why wouldn't that be a good deal?
It's a big outflow.
They're thinking about it. I think it's great. Got a J hook.
Vastly understated because this is not CapEx.
What's a J hook, Jim?
Absolutely. I thought that Meta got. All I'm saying is I thought Meta got a better deal than Blue Owl.
The 672s.
To keep it off its balance sheet.
Why did you get the wise?
Excuse me?
Wow.
Oh, wow. Because you just moved too fast for me, Jim. You moved
It's
too
called the
fast.
J-hook pattern.
I know. So underappreciated.
Some levity, you're trying to be risible.
Something exciting, something tonight. Yeah.
That I got. Thank you.
Zero.
Yeah, to your point though, I mean, Goldman's had some charts out this week looking at how they argue the hyperscalers spend is sustainable because it's not really debt heavy at this point. It's
You got the J-hook pattern, the 672s. Oh, gosh. I'm having an off day, so far today. It's going to make it better. One thing that's good for your soul is day trading. 102 to 114. Ah! Come on, you idiot. Oh, 2 to 114 for my first trade of the day. I just got in. 3 white soldiers. So this is a continuation pattern. We're going to go higher. OBS, you having issues? We're back to 102 here. So this is going to be a continuation pattern, probably to the 200, maybe back to the top of the orb. From Washboardjim, the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Come on, what's going on here? I think we're going to break out. So I got back in. It's the same price I got in before. May a circle be unbroken, by and lie, Lord, by and by. Oh. 121. What am I seeing? Bind? Yeah. Good job, Randy. Let's look at bind here. I'm going to erase this sucker. I'm having little issues here with my platform. These are old trend lines from previous trading when I traded it. So I'm going to clean this up. I had a big accident this morning. I'll talk about it here in a little bit. Come on, you bitch. I feel like I need to... Look at that. It took 7 or 8 seconds to get that where I wanted it. 1, 2, 3, 4, 5, 6. Come on. I gotta. This ain't working for me. Damn. 90 days. Okay. So on the yearly high is 664. So this thing could pull back eventually to a triple top breakout at 467. Yeah, I gotta reboot this. Oh, you bitch. $468. No, I reloaded on SPY and got out again, but I'm going to look here in a second. Right now I got to clean this platform up because I don't like this. We always get this volatility first thing in the morning. Let's go. We got to break the 200. Baba's broke out. NVIDIA Meta. Woo! Oh, NVIDIA, yeah. I was calling out NVIDIA yesterday. Meta's so far everything's looking good, but Apple's at a double bottom. Bind has to hold 468. So I don't think I'd take it until then. And just see if it retests at 468. I know a guy that made a ton of money on this one. I made some, but not like you. $750,000. I don't know how much he had in it, but he had to have a lot. That's definitely a pivot point area too, now that I look at the 1 minute. Almost to the penny. Man, I had a real bad accident last night. Not in my car. AMD new high. So I'm going to be watching SPX here. I got to clean this chart up. This was yesterday's slop. Definitely at support that I had at that red line. Well, I don't know if I want to. I got to keep that support on here. 6, 7, 3, 4, 5, 9. That's a big number. Do you understand? Say yes. Yeah, it even held right here. So okay, I got it down. I can't trade like this. I got to close this platform down and reboot it. Because I ain't going to sit here 8 or 9 seconds to fucking... By that time, I'll go and have me a coffee made, and I'll come back to it. We're definitely at a head and shoulders. Well, kind of. This could play around for another little bit. I got to pull this platform down and reboot. So while it's doing that, I'll tell you what happened. Where's my phone? There it is. Last night I went to go clean SRC, and they had some construction work going on, so I did some intense work on the bathroom to clean the floors up. Here we go. So I went to go fill up my mop bucket. I'm going to reboot this thing. So I went to go refill my mop bucket up, and I left the water running for about an hour. It soaked the floor up huge. I mean, I felt like crap. So I stressed out and had to show up late to my other jobs and suck all that water up. I got to thinking, man, I need to quit. I don't need no more stress in my life. Bad enough, all these idiot protesters driving me wild. I told a protester the other day, I said, what the fuck are you wearing a mask for? Show your face, you bitch. $0.90 here on the, I gotta look at the SPY chart. I wonder if they're doing this on purpose. Schwab. Last time he was acting like this, I needed to get a new mouse. I'm thinking about doing that because I do a lot of. We're at the 1, 2, 3 on the symmetrical flag. You had 3 white soldiers here. We pulled back to the third soldier, and that's where it should pull back to and respect it, and it did. Then we pulled back for the second time. And also, it's a descending triangle. But here it's a symmetrical flag. So let me look at the SPX. SPX the 22nd, the 6750 strike, or the 6760. But I'm going to go with the 57. I want to get closer to the money. Remember, the fat cats say we're overbought. That's all they could talk about. I even heard one guy talk about rotation again. One guy said, wait for the pullback so I can get back in these magnificent 7. We just broke the triple top. These are depreciating. Didn't really bounce up much on that candle. We're not completely broke. So I think it's retesting right now. Yeah, we got 3 bottoms and 3 tops. Okay, here we go. We're going to find out who's naughty or nice. $4.80. Now I'm going to put risky on this one here. I'm going to hold this for a bit. $10.4. Platform's working a little bit better, not good enough. We got an India deal brewing, and they're brewing on the China deal. God, come on, man. $5.20. Come on, hippie. Hippie, 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 hippie. Come on, Esther. Tuning in to me today. Go right. It's risky. Come on. Well, do I want to get another one? just went below support. I didn't want to see that. I'm gonna go get my water started. Take off my uniform and my gun. I need a gun to travel these streets at night. Nobody fucks with me, that's for sure. We come back and hit the 2 hour. On the 5 minute, we could hit the 200 or retest a double bottom. If that happens, I'll add one. Right around 67.29. $67.29.27. We fell out of the flag. What's Netflix doing? Oh, excuse me. Netflix. Netflix is below my support. 11.55. Okay, here we go. I'm going to add one right here. Add two maybe. $3.80. There it is right there. Boom. Got it. Fuck. Okay, 3:30. Two at 3:30 and one at 4:80. go. $430. No, if the way I draw it out, it's not descending. It's symmetrical. But it could be descending if you use the wicks. It'd be right here. Support would be right here. You see that? If you use the wicks, it would be descending. Now we got to break this resistance. That or I sell it. I jumped in it because I thought it was a symmetrical. Man, it's got a lower low than, let me look. It's more or less a double bottom counting the wick. 67.27. So at 450, I'd almost exit here at 63. I'm out. Fuck it, I ain't gonna take a chance. We hit the 63, so that's an exit idea. Chart patterns, moving averages, being in the now. My opinion right now is that the market's kind of consolidating from yesterday. We got Powell speaking today, I think. Am I right? Trader Eye Tesla earnings. Tesla earnings. Well, they got Tesla earnings on the SPX chart. Old economy giants help lift Dow Jones. So we're back at 340 here. I'm not feeling very bullish unless we come down and do this triple bottom here. I might jump in it just to give it a shot. Market's a little testy today. You're not a big fat loser. Let me find something out here real fast. Okay, the SPX, we're nearing yesterday's lows. So I think it's going to make a decision real shortly. And we're going to go back here again and look at this yesterday low. So we got a head and shoulders right here. So let's put that on there. I got 67, 24, 69 to reverse. And if that don't happen, we'll drop a couple more bucks. To 67, 22, 54. So we're going to either hold here or we're going to hit 67.44. And that'll be yesterday's low. Ah, I didn't do it. Fuck. Ah. Well, frick. Glad I got out of that piece of crap. Straight down, man. What's Bind doing on this here? Bind went up. It didn't hit my support. And I still think Netflix is way overbought, but you can't tell that with the fat cats. It's like their go-to thing. Same as GM. Way overbought, but I heard $86 the other day, price target. I need to go get my coffee going. Something to warm me up. I don't even know what. 48 degrees outside. Oh, I just farted. Oh, God. That was uncalled for. Woo! Narcissistic Jim. He don't give a crap. Yeah, I'll tell you what, last night was not my perfect day. I can't believe I let that mop bucket overrun. I was going to jump in on the corporate meeting and say, I screwed up last night. TSM at 290. Let's look at AMD and NVIDIA. Ooh, NVIDIA knifed. AMD, we got some opportunity here. And I keep reminding everybody, fat cats, you got to be in the now, and they've been talking overbought, 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 overbought. They're not comfortable. They're not comfortable. I am. I mean, this is what I love when it comes to me trading. The way I trade. So you got to be very patient. Slash ES, Jimmy called 6745. Jimmy called 6745, so let's see what happens here. SPX 150. I could almost move them up. Randy. Jimmy called 67.45, baby. Yeah, you'll be down probably. We're going to do the final test right here. Triple bottom. Prepare ye in the name of the Lord. The 6750s at 155. I'm going for it. Now, this is risky. Woo. Okay. I think you know what to do. You need to hold right here. If you have any decency. I have to get out my Bible verses, I will. Whatever did happen in my Bible verse book? Okay. God, the Eternal One, without beginning and without end. Exodus 3:14. Hebrew 1, chapter 1, verse 1. He works in time to help us understand him, how to serve him, how to act as his people. Amen. 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 Huge risk. Tight stop. Hallelujah. Oh yeah. Oh yeah. Amen. 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 Come on, baby. We've consolidated this area. Nancy, get the shot of vodka ready and the Valium. Okay, this is it. We have to hold here. We have to move up. I'm about ready to stop. Huge risk. We got one, there it is, 45. Please hold. Please hold. So I'm going to add 5 more right here. I should have waited for that 45 is what I should have done. $1.25. Okay. Now, if this don't work, I got to get stopped out because I ain't going to sit here and watch it drop another 10 points. This is a very important support, in my opinion. No. Come on. Stay here. Stay here. I have an average of 140. The crowd's going wild here at the sports arena. Down $300. Now I'm down 4. Shit. Ah. I gotta go check my phone. Well, I got to make a decision. This is nasty. Come on. I'm down $400. What are you going to do, Jim? I'm going to hold it. But if it goes down much more, I'm going to get out. Now it's come up and retested the 45. Come on. Come on. Netflix is at 1120.89. I'm not saying that's the catalyst for the market by any means. Amen. Come on, let's go. Yes, come on. You can do it. You can do it. You can do it. Mm-hmm. Amen. 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 It's one of them days today. I'm down 200. I got 10 contracts at 140, and I really don't want to go over my limit. There's down 100. Boom. $140. Come on, baby. Now, if you're in this trade and you're down, I'm going to hold on to it just a little bit longer. Oh, come on, baby. Come on. 155. There we go. For I'm Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being the recording I did yesterday had music in the background, so I got to redo it. Falling wedge. Fallen wedge, inverse head shoulders. I'm up a big whopping $150. Falling wedge, falling wedge, head and shoulders, yeah, 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 yeah. $1.60 some. Oh, yeah. I should take profit because this has really been a fucked up trade. $1.65, baby. Oh, God. I'm out. 160. Now I'm going to be all out here at 170. Come on, baby. Give it to me. Did I ever tell you how much I loved you? Yes, 180. I don't know how he does it, but he did it. Oh. Okay, we're going to talk about this trade now. So what we have on here is the SPX, and the VWAP doesn't show on the SPX for some reason. So I use the /ES. And then when I'm doing trading the SPY, I use the SPY VWAP. So when the /ES gets close to the VWAP, that's a pivot point. So I was down, this thing was at 95 cents at one time, but I held on. I got first entry was 155. Then it was 125 with an average of 140. So we've got two things going on here. We've got a snake on the /ES, and we've got a fallen wedge on the SPX. So once we broke out of the fallen wedge, we pulled back and created what you call inverse head and shoulders. And then you run it up and get out at the VWAP on the /ES. So I've got the SPX here and the /ES with the VWAP, and I'm going to use it. And we had the 9 cross over the 21. That's the 9 EMA crossing over the 21 EMA, which is another trading apparatus. Strategy. So when the 9 crosses the 21, that's a go. And it came back and hit that 21. So we got an inverse head and shoulders. We have fallen wedge, breakout, pull back into an inverse head and shoulders, and then out at the VWAP. Do you understand? Say yes, someone. Amen. Amen. Oh, I'm not live on Discord? What happened? Oh, I gotta fix that. Let me see something here. What the hell's going on? We got a lot of junk in here. I need to clean it out. So I don't know if y'all heard what I just said. We're coming down and retesting the right shoulder again. So we had did y'all hear me talk about the trade? No? Okay, let's talk about it. So I got the SPX and the /ES right here. I took my first entry, and then I added on at 125 down at the 47.45 area where I called support at. Well, it created a falling wedge, and then it broke out of the falling wedge and came back and retested an inverse head and shoulders. And then I knew more or less, and we had the 9 cross over the 21 EMAs, and it run up and hit the VWAP, and that's where I got out of the trade. So I sold some at 160, and I sold another 5 at 180. Now it's already dropped down to 95 cents. 90 cents here, and I'm gonna go get my dinner ready and relax. It's just been a tough day. 4 for 4. So you use that when you're trading SPX. I use the VWAP on the SPY. But when I'm trading SPX, I use the /ES. Do you understand? I've been up since 1:30, brother. Oh, Randy's in a pissed off mood. I hope the mailman doesn't come up to the door. Man, it's cold in here. God, 69 degrees. I might turn on the heat, see if it works. If it doesn't, I can tell I think I will. I'm going to turn the heat on. Oh my. Let's see if this sucker works. Oh. Don't get mad, Randy. I'm getting ready to move these calls up. Because I think we're going to have moving to 6730s. SPX, I'm moving to 6730s. My soup is done. Now I got to go make my toast. Okay, get ready. Double bottom. Prepare ye in the name of the Lord. $2.95. Amen. 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 Oh, God. The double bottom didn't hold. Oh, no. 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 This needs to hold. Fat cats are pissed off. You shouldn't be that upset, fat cats. Up. Amen. Amen. Come on, 3 black crows standing in a row. 3 black crows standing in a row. 3 black crows standing in a row with a hammer, yay. I got 3 black crows standing in a row. 3 black crows standing in a row. My soup is ready. My toast will be on, for I'm Washboard Jim, and I'll soon be gone. SPX Lotto 6730s at $2.95. I thought I got in at the double bottom right before it. I should have had it. Well, it's 45 degrees outside, but it doesn't stop my trading pride. I love a little chill. Let's climb up the hill. It's 3 black crows standing in a row. Toast. It's lunchtime and the piggies roast. It's time. Break this default and watch it stock climb. It's 3 black crows standing in a row. Here's my time to add right here. $2.55. Now, I really need this to hold. Come on. Fudge. Man, this is really a hard market today. Fuck. Come on. Needs to hold that right there. The triple bottom off that wick. We're at 215 now. Need to break out. Come on. I'm about even. Let's break the 9. Run it up to the 63. Let's break this 9. 67.13. I wanna see. How does he stay so calm? He plays his guitar. $3. I will be going to get my lunch in a second. I was up a little bit there for a second. Not an easy day today. Bind. Okay, I'm gonna have my lunch and watch my trade go up. I'm at $3. I can get out now and be happy. Not by much, but $100. So this is what we got. If we break the 21, we got the 63. Or we hit this shoulder line. Right now we got another head and shoulders right here. Off the approach. So if I don't feel good about the trade, I'd get out now, knowing that we hit the 21. But I think we're going to break the 21 and hit the 63. These should be worth at least $60-70 a contract. And if the 9 crosses the 21, that gives me a confirmation that we will hit the 63. Right now we've got a head and shoulders, inverse head and shoulders, left shoulder, left shoulder. Well, this one here, a little too high if I want to count the wicks, but I'm going to count the bodies. And over here on the SPX, we have an ascending triangle. /ES. So there's a couple bullish patterns right there. There we go. Hark the herald angels singing, glory to the newborn King. Holy I don't know how he does it. But everybody was talking about Washboardjim last night on Fox News. And he said, how do you do it? And I said, well, takes a good night's sleep, hard day's work, and a little bit of titty shot from Nicole. Does she know you watch her titties? I don't think so. Yesterday, she really did me good. If you know what I mean. You sick. You sick son of a bitch. Yippee-yi-yi. Yippee-yi-oh. Oh. I didn't sell them. I should have sold them right there when I had a chance. Three black crows in the head and shoulders. There we go to the 63. I'm going to get out of it. This could be a runner at the end of the day. But I don't know. If we get like news, a tweet, India deal, done deal. Or China, Trump meets with Xpeng next Friday. Okay, Father. As we approach the 63, make a business decision. $370. Chop chop. Okay, we're going to talk about this in here. Everybody ready? It's a beautiful world today. Jim, how can you be so excited? Well, it's not easy. I was born full of excitement. Can we hit the VWAP? That's the question. We got babies down on the 3 black crows. We got the 3 black crows standing in a row. Ah. That's not how you spell 3. You don't spell it like that. 3 black crows. 3 black crows standing in a row. 3 black crows. $4.40. $4.60. Ah, damn it. Ladies and gentlemen, Washboardjim just made $1,200. Randy, what do you think about that move? Share with the squad? What's that mean? Oh. Oh. La 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 la. Yippee-yi. Okay, YouTubers, we're going to talk about this trade. So buckle up. Now, I'm going to show you different indicators that got me in this trade. I see 3 of them, and I mentioned all 3. You know how to count to 3. Anybody on YouTube cannot count to 3, let me know. Because 3 comes up a couple times. I'm going to make sure that everybody on YouTube's hearing me. I'm on Discord. Okay, you ready? YouTube? Anybody in here that can't count to 3, let me know. Everybody can count to 3. Okay. So, I recognized this trade with 3 black crows and I jumped in the trade. Then we dipped on down and I recognized a 1, 2, 3. So we got 3 black crows with a 1, 2, 3 touch down here at the bottom. Leading off with a hammer. As we come up, we came back and created an inverse head and shoulders, which we broke out of the snake. So there's the knife. So we've got 3 black crows with a triple bottom, 1, 2, 3, leading out with an inverse head and shoulders. Then my goal was to hit the 63, but we had that big engulfing candle, and I held them on. And I got out of the trade once I was up a couple $100 contract. Greed is the hardest thing. There's times where I've sat there and they just kept running and running, and I go, wow, this thing's at $2,000 now. And I got in and had an average of 170 or whatever, 275. And then there's a lot more times where once it gets to a peak, like $1,200, I mean, in a matter of minutes, 5, 10, 15, 20, 25, less than 30 minutes. And a scalp can only last 30 minutes. If you go beyond 30 minutes, that means you're in a day trade. So we had 3 black crows with a triple bottom with an inverse head and shoulders breakout past the 63 and the EMA and the 50 SMA, and the 9 crossed over the 21. So don't forget about that little creature right there when the 9 crosses over the 21 EMA, because that could be a continuation run. And as long as you hold the 9 with your candles, stay in the trade. But once you break out of them, unless you hit a solid support like the 63 and the 21 here, we could bounce up and go higher. But today's been a tough day. So you got to not take too many chances. And I took a lot today. So this calls for a song.
Yeah. Yeah. Jim back, drinking the king on his throne. Put the cutters going now, he's back in his zone. $40 for a hooker, he'll never forget. Some deals are shady, but few regrets. Markets of money makers, turn on the machine. Buy low, sell high, living the dream. Stacks on financial feast. Jim the ruler got accounts to increase. Charts on the screen, the market will tank. Shot T in hand and he's ready to bang. Numbers dance on in the chart like a hot Vegas light. Waiting on bull facts like they're gonna take flight. Markets of money making turn on the machine. Buy low, sell high, living the dream. Stacks on financial feast. Just the ruler got accounts to increase. Refocus and dialed in. Got a market to conquer and we're ready to win. Yeah. Takana was the blast, what is now in the past. The market is his bitch, hit the money, make it switch. The king's got swagger, he'll never fall. When the bell rings, we're making money for all. Markets of money, make a turn on the machine. Buy low, sell high, living the dream. Stacks on financial feast. Jim the ruler got accounts to increase. Markets of money, make a turn on the machine. Buy low, sell high, living the dream. Stacks on financial feast. Jim the ruler got accounts to increase.
Okay, the SPY. SPY's got to break the VWAP. Now, if you're getting too far out of the money and you did the same day lotto, you might be doomed. Man, this soup is just delicious as could be. I can't believe how many bowls of this soup I've ate in a year span. It's just so good. I don't think I'll ever get sick of it. Now I'm gonna go make my hot chocolate sugar-free. Oh, I forgot to take the pictures. I might go down there and see if I can get in there. I think they were out on a case this morning. I couldn't get in upstairs. The guys with the guns. I'm gonna head up there in a few minutes and check it out. Take your pictures. Oh. Okay, we're going to see what Nicole looks like today. Well, she's not up there. Diane King is. And Mr. Spit on his face. And Bald Eagle Tim.
Instrument, that's also under some pressure. I remember.
What do you remember, honey? I think I need to get a new mouse, I hope.
Morgan Stanley is saying, in terms of their guidance, to them there is a surprise here. Tom, what's your take?
Well, we talked about this yesterday, the low bar and Texas Instruments. It was actually negative on the year and underperforming most of its competitors and the sector in general. And they still didn't do anything to kind of excite Wall Street, basically in line.
I think Texas Instruments are a little bit too high priced.
Guidance that they gave, which was a little bit lighter than expected, margin concerns. This might be one of those things where I know they have the exposure to China, about 19-20%. But then you look at the automotive revenue, automotive and industrial side of their business, it's about 70% of the revenue, right? And then you see automakers kind of coming out with blowout numbers over the last quarter due to the pull forward and the health of the consumer. But then you start to look at depreciation costs, lower utilization at factories as drivers continue to recover across the analog sector. So they're in everything. They're like the backbone of the semiconductor industry, focused more on the analog. But this might be an execution problem. I think that's one of the concerns, and I read some commentary about the conference call that the executive team wasn't very excited about their outlook, and that'll put a damper on your stock for sure. So maybe it's an execution problem, and they have to start to consider it. Remember, there's some activist investors involved in this company already, so maybe some changes needed at this at Texas Instruments.
Maybe they need to handle their earnings call like Alex Harp does over at Palantir with, kind of some of that, it kind of evokes like King James language to get people excited. But to your point about maybe there's some execution risk, maybe that's one of the issues, Tom. And then you talked about the low bar going into this, and now it feels like let's make it lower. Kev, what's your take on Texas Instrument?
I think this is the result of guidance that didn't get anyone excited about the stock. And this is a legacy, old school semiconductor maker. And if they're not taking advantage of what's going on in auto right now, if they're missing numbers based on that, maybe there's other companies doing it better. Maybe there's a better mousetrap out there. And we always talk about the three-headed monster of earnings and guidance and the way you see the future. You better be upbeat and aspirational, or this can happen to your stock.
Okay, we're getting ready again.
I think that Texas Instruments, a legacy semiconductor player, just didn't excite anybody.
Right shoulder, second time.
Excite people in a conference call, your stock sells off $10.
Okay, that's a good point there. All right, let's talk a little bit of activity that's happening within the Mag 7. This is really about this AI arms race. So Alphabet Google, it is higher right now, and that's on reports. There's a Bloomberg report that is in talks with Anthropic for a deal that will give Anthropic access to more computing power. That also comes on the heels of news that Meta is forming that multi-billion-dollar joint venture with Blue Owl Capital to develop a data center in Louisiana. And there's also that news circulating around Meta today about them, that Axios report cutting some jobs. So the Meta shares are under a little bit of the market trying to kind of make sense of everything. Tom, let's talk about this Alphabet, Google especially. And I mean, of course, this data center in Louisiana for Meta. What is this all? What's your take here on it?
Well, it's just more partnerships. It's starting to get a little bit cloudy as far as who's partnering with who's going to benefit who at this point. This is definitely a bonus for Alphabet at this point, where Anthropic is going to use their cloud computing platform that kind of takes the investment that Google Alphabet already has into Anthropic and kind of expands that a little bit. But then, you've got Amazon under pressure because of that also, because they've got the big investment in Anthropic also. So that's what you have to start to take into consideration. They haven't given any details about the tens of billions of dollars that Bloomberg reported that they're going to be
tens of billions of dollars.
At the same time, I think investors, when you start hearing all these deals getting done, whether it's NVIDIA with OpenAI with others, Microsoft's deal with OpenAI, it's getting really cloudy, and it's having me scratch my head of who's going to be the winner, or is it just these companies reaching out for these partnerships because they need them to stay ahead of their competitors, or at least to stay in line with their competitors at this point? I mean,
Get ready.
For Google Alphabet, but not many details on it. And then Google Alphabet on the back of that, CMA designated them over in the UK as strategic market status. So that means the toll booth of fines for a lot of these big tech companies are probably going to continue because the CMA and
boom, there it is.
are coming down pretty hard on our
$1, $2.
The administration
$1.95. Oh, there it is. There it is. There it is.
Woo. I can't wait for that day that this washes out where I can get some more
there it is.
on these partnerships.
To use a term that our producer
I don't know how he does it.
said, cloudy on cloud deals. Can't let that one get
But he's
away
doing
from
it.
us. So, Kat, this is, I mean, look, so it just feels like the handshake is
SPX
here
calls,
when it comes to all these
scalping, Lotto,
Alphabet Google's already an investor in Anthropic. It's also a cloud
the
provider. What's your take on all this?
6730s
I think the PR department at Google Alphabet is working hard.
$1.95.
All over the place. There's one that broke 2 minutes ago. Google claims first verifiable quantum advantage. And so there's the headline. I can't read the article right now, but they are all over the tape. Tom mentioned the strategic
Did Tom mention
market
it?
status. That's more pressure, but they're up in a down market, so it must be fairly, the entirety of this is good news. But we talk about it a lot on the show. Every day there's a new partnership being formed with cloud and AI and energy, and they just it's hard to keep track of all these. We could just do a show on AI partnerships, the AI partnership show, and we have plenty to talk about every day. So yeah, Google all over the board today with headlines, and stocks up in a down market. So pretty good job on them, but boy, a lot of news coming out from Google off that.
I think what that's about, the quantum piece, because the idea with quantum computing is everything will be able to be done faster than, the way
So true.
computers work right now. So what they're saying is they're, kind of at the front of the line.
So true, so true, so true.
As it relates to this, we'll see if they are indeed at the front of the pack, because it is about, right now, the AI arms race, and the quantum computing is kind of a part of that conversation as well. Although it's difficult to do that at scale.
La 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 la.
With the cooling that is required there for those machines. All right, I don't want to get too far in the weeds. Let's talk AT&T.
Spiders in the sky.
They were mixed. It did have some growth in subscribers. Tom, what's your take?
Yeah, the broadband numbers were pretty good. Post additions as far as their phones go, 405,000 added there. So making inroads. I still think that you have to compare this one to T-Mobile, which has been pillaging both Verizon and AT&T over the last several years. A lot of good promotions and stuff, but the stock's weak here today, hitting 8-month lows on the news. Highest broadband adds in 8 years during Q3, so that's probably a benefit for them at this point. Stock's still up about 12% so far this year. Mobility services revenue grew about 3% or better, according to the company. And then fiscal year adjusted EPS, they look at 197 to 207. Consensus is 206, so maybe a little bit of weakness on full year fiscal guidance on this one. But looking at the chart of that, the stock just off multi-year highs above $29 a share. Now it's starting to be under pressure here a little bit. But as I mentioned, it's still up 12% this year on a pretty decent number for this company, but maybe a lot of that was baked in.
Yeah, and that's why at the beginning of this year, they were still kind of keeping up the fight that they had with all the promotions to, pull some of us from one network over to the other network. So they had a lot of that going. One of the things I thought was interesting that the CEO kept said that they are attracting and retaining high-value customers. And like, what is this high-value customer? What does that mean? Kevin, what's your take on AT&T's results?
I don't know, am I high or low? Can you find out where I land, Diane? Am I high value or low value? I have no idea.
Right now, bald head, you're low value because you spit too much.
All my children, so I don't know. But here's what I think. I think that, this definitely trades. I use AT&T. They seem to do a pretty good job for me, but boy, I just don't know. These stocks just aren't sexy in a world of really sexy stocks. Other than a 4% dividend, it's a pretty solid number. And at a $25 stock, a lot of people can own and afford that without having to worry about. But yeah, adding 405,000, I think, was the number that they added. Pretty solid numbers, but the stock is down about 2%.
Now, to be fair, it has outperformed T-Mobile and Verizon this year, whereas last year T-Mobile was the outperformer. So it just shows that, maybe there is some shifting happening with.
We're now at $2.40. As you notice, we just went up and we hit the resistance line. We hit the resistance line once before and pulled back. So now the fact that we hit the shoulder the right time, second time, and I've talked about this before, and I'm going to talk about it again. Do you understand? The second time we come back to the right shoulder on the inverse head and shoulders, it's usually the breakout time period. So if we're bullish and we look at the clock, still got time maybe to break out. Or you just take your profit and you have 6 successful trades. Because this will be number 6. At 195 to 240. But now it's too late. As you approach the 63, EMA is another resistance to exit the trade. Huh. Not sure how he does it. I'm going to go into the kitchen. Should have probably sold him there, but I... Yeah. I want to see if we do that continuation and break out. I got to redo that video that I did. Because it has me, it has Schwab in the background. That annoyed me. I listen to all the videos I do. See if I missed anything or... Kind of slow right now. AI stocks are driving your S&P 500. Here's how it affects your portfolio. Well, I didn't want to see it come back down for the 3rd time. That's not good. But that's been kind of day we've had so far. Then after this, I'm going to run up to the IRS and Come on now. No. Never had a double bottom. Triple bottom. Market's dead. Ain't gonna help matters. $160, $170. $55. so am I. I'm getting old, it's time to fly. I've sat here for 21 years. Time to have another beer. You need to break out. My bones are weak and I'm not stout. Been here for 21 years. It's time for me to fly. God darn, what the fuck? That sucks. Wow. The dollar. Jesus Christ. So I'd about 10 more at $1 here. I got 15 now. Damn. I was just like a drop. I'm singing a song. Stop, falls, and falls. Wow, that was hurt. That hurt. Jesus. Huh. What's in the news? My God. It's highway robbery. Hardly ever has that ever happened to me. $132 average. There we go. way that knife came though, man, I want to know what caused that news. Anybody know? Come on, baby. Break it. Be nice to get a buck on this one. $155. I'm exhausted. The prison guy's up.
Over the last 18 months.
Some of the technology is essentially there already in some ways, because I remember I was in this Uber that was a Tesla that, you know, was, he said it was FSD, and she said, you want to see? And so, you know, we did a little bit of the full self-driving, meaning like the driver was there, but hands off the wheel, so it was a little wild, it felt very futuristic, and I feel like you have thought really quickly.
Yeah, no, I use full
I don't see how they can let that happen.
For a few years, and the big steps, the exponential steps in this technology have been breathtaking. You know, 2 years ago, I would have compared it to a pretty new, 15-and-a-half-year-old permit driver where you're kind of ready to grab the wheel or hit the pedals at any point in time away from them. And now it feels like a seasoned adult is behind the wheel with some edge cases that need to be ironed out.
Interesting. All right. Well, we'll leave our conversation there for now. That's Andy Swan, co-founder of Likefolio. Tom, a lot of good stuff there. And then, you know, what also comes to mind today, GM putting out that news about the eyes off the road, which when you see headlines that, it makes you kind of freak out a little bit, but it does seem like
I'd work with the prison guy.
That all of these car companies are going over the next 2 to more years. So, Tom, let's get your take first. Let's bring Kevin. I know we're going to bring Kevin back in shortly. What's your thought after all of this insight from Likefolio?
You know, not surprising that they saw the data kind of spike there just on the pull forward from sales of EVs before the tax credit went away, but it seems like they're still pretty high on Tesla moving forward, and we've seen the reaction off of those
190.
We're up over 100.
Profit.
So not surprising on this one, but Kev, when you look at
Profit, 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 profit. I'm about done. I don't want to trade no more. That really hurt me right there. But it didn't hurt me. I got out 190, 185. But that knife didn't take but a second. They're back to 165. I'd even take that. I think this week's a little wilder than last week. I'm gonna go do a job after I drink this hot chocolate. Oh, let me see. I might not be able to. They might be at lunch. I'll have to wait until 1. Back down again. Might have to move these up.
Popping up as a symbol of that change. Record when they see me up in traffic, they say GTL some more. Send the player haters running straight back to the dealership.
Well, well, I think I'm going to look at my watch list. Bet you it's redder than could be. No, there's some green on it. Not much. Cost. On a day like today, cost might be one to look at. I darn regret it. Down another $5. Regretta. Regretta. That's funny. So we got Regretta, which is almost to a support level. Don't be fooled because speculators in gold, quantum and nuclear energy aren't going down without a fight. You think so, huh? So they got a blow-off top signal. Wonder what that is. After a blow-off top signal. I'm going to see what that is. Because I've never heard of it. Aurora blow-off top signal. Okay, I don't get that. Oklo down 30 cents from it high. Irene down 28. Regretta down 33. AST. There's one I missed. Trade I missed right there. 115 to 150. One SPX.
These trades on. You do have some assignment risk on that short option going into expiration over the next 2 days on that one. And the option market priced in about a plus or minus $8 move either way in the shares. So using what the option market priced in to set your strikes might be the way that a lot of people look at this. You don't have to do it that way. But then again, if you expect a 1 standard deviation move or even lower on this one, remember you're paying less than or about half the width of this diagonal. So anything below that maybe 139 level is going to be profitability on this one, Diane. But downward outlook, but it's just an example trade, Diane.
Yeah, just an example trade, and the perspective you gave about, having to maybe adjust the prices, especially because you have to make these adjustments when there are shifts in the broader market as well, like we saw as we got towards the bottom of this hour. All right, great perspective there. That's going to do it for us today on Fast Market. I'm Diane King, all alongside Kevin Haynes and Tom White. Download the Schwab Network app. It's available in the Apple App Store. Tune in 24/7 on SchwabNetwork.com. Stick around. We've got Next in Investing coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Petalini's at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at Schwab Network.
I will, baby. Do anything that you want me to. Just gotta ask. Smooch, smooch. I'd say she's one of a kind. Watch it here.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and we are seeing some pressure today as we do channel.
Yes, we are.
We're seeing some weakness, which has been the most felt today, at least by the Russell.
I love you, Jenny.
Increased substantially, about 1.75%. Nasdaq also down about 1% and some change. And look no further to some of the pretty substantial moves we're seeing to the downside in tech as Apple's lower, Amazon lower, Meta Platforms also lower, and NVIDIA, of course, our market real parameter is also down about 1.3%, and Netflix taking it on the chin down 10%.
Yeah, Netflix earnings disappointment, which we'll talk about more in a bit. Reuters headline, and last, let's call it.
Well, they're pumping Netflix.
30 at this point, where the Trump administration is considering a plan to curb software exports to China. This in reaction to that latest round of rare earth export restrictions from China. So again, that trade skirmish, war, tit for tat kind of dilemma continues to plague the market. That's really when we saw the market take a pretty big swoon to the downside, making new lows in the session. It did recover, let's call it, maybe 40 basis points or so. Basically almost having the losses intraday from the spike low almost immediately after. And then I thought it'd be interesting, checking on earnings. We have Netflix. About 20% of the S&P 500 is already reported. 83% of those names have beaten earnings. The aggregate price reaction is still about 80 basis points to the positive. But if you were to do the same exercise on the NASDAQ 100, interestingly enough, only 13 of the components that have reported. It's a smaller beat rate, 70%, Jenny. And the aggregate price reaction, I have to think Netflix had a little bit of an impact on this, is down almost 40 basis points. So the tech-heavy NASDAQ earnings has been in that negative, S&P a little bit more broad exposure, earnings still positive.
Yeah, earnings are still positive, and there have, of course, been these moves to the downside, especially, today is where we've really seen the bulk of that, especially for names that are broadly watched like Netflix, but overall, it still has been an overwhelmingly strong start to the earnings season. Netflix is right now, we think, challenging some of that narrative, but we'll dive more into those numbers later on. But to open the show, we will go through all of the individual movers as we have a lot moving throughout today's session, starting things off with some most notable movers to keep on your radar, as well as look ahead at IBM and Lam Research, both with earnings out today after the closing bell. We'll also dive into Tesla, also with earnings out after the close, as well as American Airlines for under 30. And we also have the head of investor relations, Brett Feldman from AT&T, joining our show today to discuss AT&T's results, of course, that we got this morning. So one variety of definitely an earnings focus. We are finally in the full swing of earnings season, Alex.
We definitely are. Let's talk some Netflix, because this is, if not the story of the session, it's one of them for sure. And I know you'll go through some of the numbers, but we get less information from Netflix. So when there's disappointing news, of which this objectively was, pretty big miss on the earnings front, I almost wonder, kind of the less you get, is there more question marks then? Is that explaining why this is a pretty big sell-off here, in the sense of, look, you don't tell us how many subscribers you get anymore. We're going to start questioning your ability to grow at the pace that you want to if the only information we get is not good.
Well, I mean, I think absolutely. I think that without having that key number that we're so used to following, I mean, it does sort of leave then either further weight on the fact that, I mean, earnings were pretty substantial miss, but as far as like, revenue is concerned, this quarter, I will say there was a lot to like here. Like we did see, I mean, higher revenue driven by this membership growth, increased ad revenue and price hikes, which would tell you that we're continuing this really strong run for the dominant force in streaming. Revenue rose 17%. That was just below its own forecast, however, but they did say best quarter ever for ad sales, and they're on track to more than double that revenue from that business this year. Net income increased nearly 8%. Now that was $2.5 billion. That was well below the almost $3 billion expected. I mean, substantially at that. But its operating margin 28%. That was also short of forecast, which the company attributed to this expense related to a dispute with Brazilian tax authorities, saying it would have topped actually that margin forecast had it been absent of that issue. So they did say that that will have no material impact going forward. It was a one-time impact, so that I think is important to note. But they cut their expected operating margins for the year to 29% from 30% as a result of that Brazilian tax matter. So that would tell you, again, that could still have some lingering impact if it's impacting now forward-looking operating margin. But we've seen right now a lot of the real focus on streaming, especially with Warner Brothers news that we've discussed pretty thoroughly. But all that to be said, I mean, Netflix was up about 40% since the start of this year, and it did mention specifically K-pop Demon Hunters. Never a term I thought I'd say as much as I have over the last several days, but I might have to watch given all of the hype it's gotten.
So you look at some of the things they talk about. They talk about record engagement levels. Okay, they talk about the advertising business doing quite well. I think it was on track to more than double this year. Yet they're not even meeting their own expectations. So you start to wonder, yeah, maybe the ad business is doing well, but is it at the cause of less people, opting to go to the ad-free, or they're trading down? So maybe it offsets some of that, but it's not necessarily net new. At the same time, people are watching. Highest engagement TV viewing share that they've ever had, yet they're missing earnings. Yeah, I know there's a tax liability.
Never had.
That is expected to be, that is the baseline, and that's what the whispers call for. So, the only positive I could say for sure is that you hope the one-time effect is just truly that, and it isn't something that is ongoing, maybe masking a greater concern, but then also free cash flow is a little bit better than expected. So. They're not being flippant with the money that they take in. They're not, overly spending. They certainly do make a ton of money now, and they're positive in earnings. Very different than they were maybe a decade ago.
I'm going to take a small break.
But I'm not surprised that the stock's down 10% today with the numbers we got.
Yeah, I mean, with a forward PE of now 38 times, that's pretty lofty for a company that, of course, operates in streaming. The one thing that is encouraging from our coverage of Netflix for the last several years is they used to be sort of notorious for that cash burn. They were really building up that catalog of content. They're already right now established, so they don't really have the same cash burn like you said. We did see some of their balance sheet metrics actually improve, and that's a different tone from the Netflix that we used just several years ago. So at least from a financial standpoint, I mean, they're stable relative to all of these other streamers that are right now fighting to rethink their overall strategy.
Yeah, pace of earnings growth and pace of revenue growth has sort of leveled off or even started to decelerate. So the margin story is the concern, because for it to make mathematical sense for institutional and long-term investors to continue to park money at Netflix in terms of holding equity positions at that multiple that you talked about, this needs to be a high margin business or it needs to be a high growth business. At the moment, it's still a pretty high margin business, not as high, but the growth is starting to slow down. So you need to see that growth maybe get back up to where where it's been. Mid-20s, high 20s in terms of earnings growth would be pretty nice for this one. But hopefully it's a one-off quarter. That's what markets are hoping. We're also hoping that this isn't indicative of what the rest of the big techs can say.
Hey, we know that they have been volatile in the past. I mean, no one can ever forget the time that Netflix dragged the overall market down, and yet that didn't indicate weakness for the entire quarter. So we know we've been here before. It doesn't mean that.
Something like that. That was like
it's
40% decline.
It's nothing like that. We'll never forget. It's really like the first year of next-gen investing was that massive nosedive in Netflix shares. I'll never forget that. But Next name speaks to this broader theme of streaming. That is Warner Brothers Discovery on some news today that it rejected 3 Paramount Skydance takeover offers as it does field the broad buyout interest. Paramount's last offer was for just under $24 a share, was comprised roughly 80% cash. Now, Reuters did report that they had rejected that bid for nearly $24 a share. Warner Brothers Discovery is saying it had received this unsolicited interest from multiple parties, and that it would be still expanding its strategic review to process all of these various bids. But they did say they're moving ahead with the previously announced plans to separate it into 2 entities, being of course a streamer, as well as a more legacy studio business and a global networks business as well. CEO saying it's no surprise that the significant value of their portfolio is receiving this increased recognition by the market, but after receiving that interest from multiple parties, they are now saying they're trying to find the best way to unlock the value of their assets going forward. So jumping 11% yesterday, today up modestly on the session.
Yeah, this is an interesting one now. You got a bid now at 24. Stock's trading 20.44. So that's basically saying that the board, those who are making decisions at Warner Brothers for various reasons, think that the company is worth more than that. And at some point, if you don't start to see that as an investor base, there could be, kind of calls to say, hey, why are we turning down a $24 bid, 80% of which is in cash, and we're not trading at that. So something to watch. Perhaps they're holding out for a company like Netflix to acquire at least the streaming business if they can, find a way to get that through. Whether that's kind of thinking about the people as employees and the likelihood of them continuing as ongoing employment. Because if you get a Paramount buyout, perhaps one of the ways that value would be unlocked would just be significant cost synergies and what that might mean in terms of layoffs. So there's a lot of things for this board to think about, but it becomes very difficult to turn down things like a $24 buyout when your stock's trading at $20.45 and really doesn't have a lot of growth prospects on the horizon.
Yeah, that is true, and also, it speaks to the fact that right now, all of these companies are having to rework their business models. That tells you that then they have some of these failing assets, like the more legacy TV component, which is frankly underperforming and expensive at that. But to shift gears away from streamers now to get into Intuitive Surgical, which, the medical technology company did announce some major developments as far as improvements to its revenue, like top line growing about 23% compared to last year, well ahead of forecast. Profitability, though, was even a brighter spot. Earnings came in around $2.40. That was almost a 21% beat over consensus. Furthermore, they demonstrated this improved efficiency as operating margins expanded to 30.3% from 28.3% in the prior year's quarter. But the robust performance, which really fueled optimism, obviously sent shares higher today, but they're typically not that volatile. So we've seen, only about 8 moves greater than 5% over just the last year. And then the biggest move was just about 4 months ago. We saw the stock drop about 6% on news that Deutsche Bank actually cut its rating to sell. So the same isn't typically one of this magnitude of volatility, well outside of what the markets had been implying. But hey, almost 14% jump here.
Yeah, watch that Da Vinci system. If it continues to see this kind of performance, this could be a company that we're talking about a lot more often. A lot of exciting things. It's just the adoption's not, picking up hopefully at the pace that I think many investors were hoping. But you look at the number of procedures, pretty nice growth, almost 20% growth, which is better than expectations. So that's what I'm watching there. Obviously, a nice move today, Jenny, pulling back off the highs, but the market took a pretty big nosedive. That's going to weigh on every stock today. So the fact that it's still up 13%, almost 14%, objectively a good thing.
Absolutely, yeah, hanging on to a really nice session, but to speak to the overall market's weakness, that has really weighed on the momentous swing we've seen in Beyond Meat, which I feel like it's not a name we've discussed since probably 2021, but definitely on our radar this week. It's up 414% this week. It's now up off yearly lows by about 564%.
And down from the highs.
But was actually initially higher today, now giving back some of that strength and really was ripping as traders did discuss this possible short squeeze due to the outsized short interest in the stock before then, of course, it's now falling. But typically seen as one of these high-profile short sellers names, we are sort of seeing this added interest from short sellers on social media today and across the board. Shares, though, jumped about 127% on Monday, another 146% Tuesday, after this was added to the round-held meme stock ETF. But combined with a Walmart news catalyst and debt restructuring, this triggered this overall short squeeze that sent the stock now skyrocketing. But right now, it does feel like when you look at a lot of these things that get these, like temporary blips, I always say buyer beware, because this is right now like,
well, it's halted right now.
It is halted right now, but 63% of the shares are sold short. I mean, we talk meme stocks, legacy meme stocks at their peak. We were talking like 20-30% of shares sold short. 60% short interest is, I think that gives me caution.
Okay, so a couple things. First off, in hindsight, this is another example for an area that the market was just so certain was going to be world changing. And this is why when you look at whether it's streaming, whether it's fake meat, whether it's cannabis stocks, whether it's electric vehicles, whether it's sports betting providers, you go down the list. This is why there are skeptics for this AI large language model build out, is because we've been sold and told things like Beyond Meat were worth tremendous sums, and they were for a short period of time, and then the reality ultimately sets in. I'm not saying NVIDIA is Beyond Meat, don't conflate that, but what I'm saying is it is possible that you are seeing things like this play out in the AI space in terms of bubble-like activity. Now, to make it more present day, we also have to go back in time and talk about the meme stocks when they first happened, when it was GameStop and ANC, and it was a relatively new phenomenon, and it caught market-making firms and those who are on the other side of much of this order flow off guard. But these are very smart firms, and they are in the business of having losing trades over time. They've adapted, and you've seen this in every subsequent meme stock burst and bubble and spike. They don't last nearly as long. So what used to be a week long is a couple hours. And it's already basically turned around and it's over. And I'm not saying you can't turn around again and get exciting again, but it's not the same time as it was back in 2020 or 2021 or whenever that happened. These meme stock jumps, they don't have the same staying power as they used to.
That is such a good point too, because we used to see, like GameStop, for example, our real first front runner of the meme stock frenzy. That was on a run on any other for weeks at a time.
But it also had nothing to be like, okay, this happened before. Where's it going to stop? What happened?
Right.
It was new. It was novel. It's not anymore. We can feel like we saw what happened in GameStop. Even the worst case scenario, after a certain amount of time, it kind of reverted. So now there's not that much fear around it. It's exciting, it's fun. I see why people are drawn to this. Buyer beware, to your point. This stock went from $3.50 basically where it is now, where it closed yesterday. Traded to $7.69 today, and it's back full round trip. It's crazy.
It is crazy. And just a reminder, I was going back actually to the old price targets of when we covered this name at its peak. We're talking $250, $230, $220 a share. It did touch as high as $221. So for that reason, it's always a good lesson of some of these hype cycles. Be careful what you're buying into, because right now, we traded as low as 50 cents a share, and now trading at around $3.53.
One final thing, because I know we're spending a lot of time on this, it actually traded all the way to $239 at one point, and then it got all the way back up to $220 or whatever. But this stock remained above 150 for years at a time, and so things can remain at prices that don't make sense for a really, really long time, but eventually the fundamentals, the earnings, the valuations, they do catch up to the stock. And so that's why we always say valuation is not a timing tool, but if you're an investor, it's something that's really important to pay attention to.
No, it absolutely is. And this has been one where it didn't really regenerate our attention until the last several days of trading, as this has been a really interesting move this week. But again, caution when it comes to some of these short squeezes, because what can go up can obviously come right back down. So we'll leave it there for the top of our show today. Though coming up next, time to dive into two names with earnings out after this closing bell, those being IBM as well as Lam Research.
connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want to make even
Okay, here we go again.
Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
67s are 370. Prepare ye in the name of the Lord.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the technicals with, of course, our chart master, Rick Ducat, lead markets technician here for the Schwab Network. And we're looking at two names with earnings still ahead. Of course, IBM, Lam Research, two actually pretty solid performers on the year. And to my surprise, IBM is a bit more of the laggard of the two, but still names that have seen some nice price performance over the last 8 or so months. So walk us through the latest year as we approach this earnings event.
Yes, IBM, it's been a volatile quarter, a few months here, because we had a big push to the upside that topped out here near 295. Then, after a severe collapse to the downside after earnings, we bottomed out here around 230. From there, another sharp climb to the upside, but we failed to really make a convincing close above those previous highs. So the highs on an intraday basis came in above 301, but since then we have retreated once more. This area here near 272, this consolidation point, that's where we formed our recent lows as well. You could also say that we are moving to the upside from
Where are we moving to, baby?
In which we've been trading. The breakout has so far held on to these previous lows, 281, old highs, subsequent lows, lows here. Now it is the supportive area here. So that's where the bulls would be looking to hang on. That's where the bears might be looking for a downside breakout. If we were to examine some of our other technical studies here, our moving averages, not too terribly much help for our longer term ones. Price has been so volatile and choppy. They haven't, like, for example, our purple 250 2-day has more or less stayed consistent because of the extreme price swings here. But our 21-day EMA
got an F.
that comes in around 279. That could be another point to keep track of going forward here. RSI, our momentum study, we have invalidated our green trend line. We have fallen out of the overbought area.
Come on.
However, we have also moved beyond our red trend line here, our downward sloping trend line. We have held on to the 50 midline and have reasserted some bullish momentum here as we have continued to digest these earnings. Finally, if we were to examine our volume profile study, this area right here near 281, that's one of the standout areas. That's the most important one, closest to current price levels here. So a move below 280 or so would take us below some of our indicators here, our old support, our volume node, our linear regression line, which is our line of best fit, and our 21-day EMA. So that seems like an important area to watch in the short term. Volume starts to pick up again down here near 265. To the upside, our +1 standard deviation channel really quite close to those old highs. That comes in near 303.
Okay, yeah, and actually, surprisingly so, we're hanging on to an 0.8% move to the upside, despite the overall weakness we're seeing in broader tech. So a lot to think about here as we approach this earnings event, which actually, several quarters ago, I told you that this could be this like volatility player, but IBM has become really interesting, especially with its foray into AI. So walk us through trading, for example, purposes, of course, your strategy here.
Yeah, say you're a believer, but skeptical just because of what you're seeing in terms of today's market action and also the reaction in earnings. So risk-defined, neutral to bullish strategy, selling a put vertical. Go to about the expected move, 270, 267.5, keeping things relatively tight in terms of it being a $2.50 wide spread on a stock that's trading almost $300 a share. Say you got 65-cent credit on that, you have a chance to make $65 of $185 in risk. Break even would be $269.35, Jenny. But here's the real exciting piece. This expires on Friday, so it's super short term, really centered around earnings. If you think earnings will be, at the very least, not a negative for IBM, chance to make $65 on that 185 risk, so about a 3-to-1 risk reward through the end of the week.
Yeah, like you said, an earnings pure play pretty much. I mean, otherwise you'd be basically looking at like a
about as close as you can get.
Exactly. So really looking for some of that earnings volatility. But now shifting gears into one name that's typically seen as a bit more of a true pure play of AI, Lam Research. I mean, this name has been on an absolute run this year. We don't even discuss this name relative to like the heavyweights, but I mean, a real nice outperformer. Earnings, of course, will be that critical test stuff.
Yeah, it's not exactly a household name here, but almost tripling off those lows from the lows to the highs. Really impressive performance there. So our trend line has been interrupted, though. Our blue steep line here, the steeper the trend line, often the less sustainable it is. It's difficult to sustain this very sharp momentum for a prolonged period. We did get a bit of a pullback here. We retreated back to this gap level near 131. That was the low point after this small gap up here. 125 was another low point just below after a similar gap. So these gap levels, they can be filled.
This could be my first one.
Resistance, it's a common situation. Not saying that it's going to happen or anything, but these are levels that you might look out for based on some of the price action here. For now, though, it seemed like perhaps you could say more of a triangular shape here, kind of a wide range between the highs and the lows, but converging toward each other. Perhaps even breaking out to the downside now, testing the lower limits of that triangular shape. When we assess our moving averages, we can see that the low point here so far, where we are about now, comes in pretty close to our yellow 21-day exponential moving average there. We can see that the moving averages themselves, similar to our last chart, not too terribly much help at this point here due to this steepness of our price move here, but keep an eye on them going forward as they start to catch up. They can be other ideas for potential support if the uptrend continues. The RSI study, our measure of momentum, trending downward here, but still not making new relative lows just yet and still above the 50 midline. So when we also consider the volume profile study, again, not too terribly much help in this case because of the swiftness of our move to the upside here. But the node that we see in recent activity comes in just above where we are now. We were rejected at the top of that level. So around 140 to 145 or so, that's where the heavy, relatively speaking at least, the heavy volume closer to current price activity is for now. Our yellow 21 EMA also lines up quite closely with our +1 standard deviation channel, so that area near 137 or so sticks out even further as a supportive point. Our +2 channel, meanwhile, to the upside is around 157.
Okay, yeah, so a lot to consider here, especially as we do approach earnings, and for a name that is, again, like tripled off lows and has seen a really nice rally on a year-to-date basis. So appreciate it to Rick Ducat for all of that technical help. And now, last but not least, as we do look to trade this name for example purposes, I mean, it has been as clear of a bullish trend as we've seen.
Yeah, and while it's in a high beta part of the market right now, it's generally a lower beta name in that kind of sub-segment of stocks. But Rick talked about 137, one standard deviation channel line, and also the 21-day EMA, or the 1-month moving average on that. That was the level I keyed in on here, looking for this stock to maintain its value, a little bit more aggressive in terms of how close it is to the current share price, but again, expiring at the end of the week, 137, 134, risk-defined, short put vertical, looking to collect $1. But by collecting $1 on that $3 wide spread, Jenny, you have a risk reward of 200 to 100 or 2 to 1. So a little bit lower probability of success, still a high probability of success, that break even at 136 and below the current share price, but a little bit more favorable risk reward where it's only 2 to 1 here. You have a chance to make 100 by the end of the week on that $200 in risk.
Okay, good. And a pretty short-term example trade here, so important to consider timeline as we pretty much have now about 2.5 sessions left in this week. We'll leave it there though for charting and trading today. Coming up next, it's time for FOMO. Of course, we're previewing all things Tesla as we did already get those third quarter delivery numbers, but the next test remains as we'll have to see the broader scope of their third quarter financials today after the close.
instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the
Tesla's earnings tonight. Well, this market's reacting, I don't know. I don't think it'd matter whatever news comes out. Apple's pulled back to the first support, 256.07. I'm still in these SPXs. I got one contract. I'm getting back there. There's another one I should have bought the dip. Damn. $3.60 to $3.10, $3 just like that. These prices are very volatile today. AMD's took a pretty good knife today. $14. Apple's at my support. 256.07. Meta's back to 724.87 with a double bottom. I'm getting ready to add a bunch of contracts. Really bring this price down hugely. Get 5 contracts right now at 150. You go to 6. $140. Good. Double bottom. This is it. Hit my funny bone. Go 125. What's my risk? If I don't hold this, I'm going to get out. Come on. Might be too far out to recover. What did you do? Freeze? This thing should be up. I'm a little too far out of the money, I think. What the hell's going on here? Platforms froze. What are the 6700s at? Huh. What's going on? What the fuck? What are your 6700s at? The bid and ask is 120 over 30. Does anybody know? SPX, what's your calls at? 6,700. Lotto. This is strange. Anybody listening? They're not moving. None of them. Nor on my SPX. I mean on my... What the heck? Shit. This ain't right. Fuck. Yes. Hello. Hello. Anybody answer? Something ain't right here. Well, there's going to be some lawsuits. What the heck? Unbelievable. How can this be? That sucked. Now they're moving. Some bitch. I don't think that's ever happened. I was always getting to. They could have probably got out even there. I don't know what to think now. That could have gave the puts an advantage. What a ripoff. That's what I told you. This is kind of funny today. Bet you they didn't even put a message up in here. Come on, let's go. I'm about even. There I go. Go, baby, go. Woo! Unbelievable. Crazy. I'm out, man. Fuck this. $170. Come on. There it is. 175, 170. I'm out. Fuck this. I'm out of that. Watch it run. I mean, this thing could run now just to rub it up their butts. If it breaks out from the 63, I'll get back in it. That's the craziest thing I ever seen in my life. I mean, it went down to 70 cents. I was hurting. God. I wrote 380 on here. I had it for 380, not 370. Oh boy. That makes me not want to trade anymore today. I mean, this has been an unusual day anyway. But that last trade, I took a risk and then both my accounts get frozen. I'm going, what the heck? And then it goes to 70 cents. I'm down over 50%. I was going to sell at a 50% loss. I just bought them for 125. It just makes me mad. Makes me angry. Nothing I can do about it. Punch someone in the face. It's been a weird day, man. I want to have a hamburger. Mr. Ben's taking a knife. Is it next? Jeez. I'm going to go down to the IRS office, get away from this for a bit. Take a picture now. I got to get away from it. 'Cause that... I've never had the account freeze up like that. When you're in a trade, it's frustrating. I'll tell you a story. Years ago, when I first started trading, there was penny stocks. All the retail traders were getting into the scene, and penny stocks were like nothing. Nobody traded them. They had real low volume. Then retail traders come in and they start trading these penny stocks. And Ameritrade wouldn't trade a lot of them pennies, but Scottrade did. So I decided to open up 2 different accounts because I couldn't trade some penny stocks out of Ameritrade. And I started trading them through Scottrade. And then sometimes Scottrade wouldn't trade them and Ameritrade would. So I'd float back and forth to the 2 accounts and trade penny stocks. And then during the Obama years, they had the PDT rule, or PTT or whatever you want to call it, where you had to have 25 grand in your account before you could day trade more than 5 times a week. And that put a stopper in everybody trading. So all these new accounts came out to bypass that. So those were two different times where, you know, the system really sucked. So I've always had two different accounts. I have 4 or 5 now. But I mostly just trade on Tastyworks. And I swing trade through Toss. When the market dips again, I'll buy back and swing a bunch of stocks like I've learned to do. Like Tesla and Apple and Boeing and ones that I really like. But we're at these all-time highs, so I don't do much swing trading now. But these pullbacks now, these are starting to look at Oracle's at the 200 SMA on the daily. It's hit my lowest support. So, you know, I kind of want to swing this thing. This thing was hyped big. Even when it had the big run, they still tried to hype it. I said, don't do it. Don't do it. Now I'm at support. But the market's kind of freaking me out, and I don't know if I want to go ahead and start loading up. Like a 3-month option on this one here. They were pumping Apple yesterday. It's going to go higher, they said. Apple. They were really pumping the Apple 17. They've been pumping Starbucks. They've been pumping Nike. See, this has had too big of a run. Well, $20, but that ain't too big of a run. But we're at support. We're at the 200 on the 30-minute. I mean, in other circumstances, I'd probably buy this and swing it for overnight. We got Tesla earnings tonight. Now, I don't even know if Tesla's going to, with the way the market's acting, I don't know if Tesla would be a good buy. And just wait for that 417 again. I mean, I didn't trade this son of a bitch. I should have. I waited for that 417. I called it out way in advance. I'm mad. I'm just mad. I'm crazy right now. I didn't like being stuck in that stock and wasn't able to do nothing and watch it go down 50%. And it was a bad choice to begin with, but see, AMD's kind of overbought in my opinion. $76 7 months ago. Run up 300%. I mean, it's just, to me, that's just way overbought. Nvidia's the only one worth buying right now. They were pumping the crap out of Apple to AMD. Nvidia was up 130%. In 7 months. I don't know. Like I say, I can feel like we're overbought. I got a surprise for Sue. I traded with a guy named Wise. PDT pattern. Magnificent, is that good enough? I'll be right back. I gotta take a picture of a desk. I pissed off one of my bosses the other day. I asked for a raise. So I'm 65. I'll be 65 soon. You better pay me more. They're up to 195. Awesome. I'm going to leave and get mad. Things went to 60 cents just a second ago. Now they're at 205. A day like today, you might get a hell of a run at the end of the day. Okay, I'll be back. I keep saying it. But I gotta go do this. Oh. I'll turn on Schwab. Counts have been frozen today. And Washboardjim was saying that he was gonna... Better not say something bad that I would regret. Just better keep mouth shut.
Continue to fall, they're willing to buy the shares at that 201.60 break even. So kind of a two.
Just better
twofold
keep
type
mouth
position,
shut.
But I think it's somebody trying to take advantage of this pullback, the higher implied volatility levels, to establish, collecting a pretty hefty credit. Or hey, if the stock continues to slide, they'd be willing to buy the shares down there at about 201.
All right. Thank you for that. And then last but not least, we take a look at the
Nicole, I haven't seen you all day, honey.
I mean, there's been some positive talk about these names. You've also had a lower price of oil, which theoretically could help these kinds of companies. How about Norwegian Cruise Line in particular? You found a bullish trade.
Yeah, those lower oil prices aren't theoretically going to help them. They're really going to help them because this is all margins for these cruise lines. Because, Nicole, they're booked through 2025. Their bookings into 2026, even into 2027, are at record levels right now. And that's not surprising, right? The stock market's at record high. The wealth effect is in play here. Jobs job market's pretty robust. 4.3% unemployment rate. That's full employment at this point. So that allows people to say, hey, I'm going to use this money on discretionary spending and continue to travel. They had record May, June, and July booking trends. That's typically their slower time of the year. And as I mentioned, the record levels that they have for bookings for future bookings, pretty robust at this point. Company reports earnings on the 4th of November. That'll be a key event. RCL, one of their competitors, reports next week. That could also be a catalyst. But we did see some bullish option activity in here also. And this was in the Nov 21st, the monthly options that expire in 30 days. Trader bought 5,000 of the 25 strike calls, paid an average debit of $1.12 on those. So that break even is $26.12 over the next month. That's only about 6% above the current share price. So you don't need a big monster move, but this is probably a trader setting up for some positive news, either out of RCL next week or NLCH the following week when they report earnings on the 4th of November.
All right, Tom White, thank you for Options Corner every single day right here on the watch list. We appreciate it. Thank you. Coming up, we'll break down the AI economy, the infrastructure companies, investment opportunities that are really fueling driverless cars, personal robots, flying taxis, and much more. We'll be right back. Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalini's. We're live on the floor of the New York Stock Exchange. I was just having a conversation with our next guest, Rob Thummel, Senior
portfolio manager at Tortoise Capital. And we were talking about the future of AI and what it really could be. I mean, you were really speculating about some ideas, but it could be, right?
Yeah, Nicole, yeah. It could, I mean, we could have obviously robots. I mean, we could have autonomous everything, flying taxis. Who knows where this goes?
And when you look at these names, I mean, the big mega cap tech, you know, hyperscalers and all that, do you like those names because you think it's just to the beginning?
Well, we think where investors are actually underinvested is actually not in the mega cap tech, which there's a lot of investment, but they're underinvested in what I'm going to call the AI enablers, the infrastructure that enables all of the AI.
Ah, so what kind of names would that be?
So what I'm talking about is a company like, take Dell for instance. Dell, you and I think about Dell, we think, oh, well, it's a personal computing company. That's part of the business, but they're growing into one of the largest AI enablers. So they're owning data storage, network switches, cooling, all of this infrastructure, this technology hardware, basically, that enables all of this cool AI that's going on.
And Dell's been making a comeback, too. I mean, you also said there's the names like Digital Realty and Riot Platform. Now, where do they fit into the AI economy story for you?
So for AI to operate, the heart of AI are these data centers. These massive data centers are being built all over the place. So Digital Realty is actually the largest AI data center REIT in the U.S., and it's a pure play way to play these data centers. And so if you think about what's going on with data centers and AI, you need more of them. There's a scarcity value of them. So what Digital Realty is able to do is they're actually able to raise their rents and extend the duration of their contracts because there's just not enough data centers. So that's how they play. Riot Platforms plays a very similar role in a little different way. They're actually converting from and transforming from a Bitcoin miner into a data center operator.
Right.
And when that transformation happens, their valuation will probably rise even more.
You got to give them some credit there for sort of changing roles a bit, too. You know, because when you think of Riot, everybody always used to think of just Bitcoin. You know, the big picture here is the spending that we've been seeing on AI. And at what point do people begin to get frustrated saying, they spent how much? And is there monetization? Why do these companies still have so much CapEx on AI? You know, at what point do people expect a return on investment or expect something?
Yeah, well, no, it's a very good point, and that's something to watch very closely, Nicole. I know you're watching it. What we're watching is, will there be a return on the capital spending? What's the return on capital for all these companies, these hyperscalers? And that's the really important point. Here's the good part. There's a lot of free cash flow available from all these hyperscalers, and the U.S. wants to win the AI race. And to win the AI race, we're going to have to spend a lot more money, build a lot of this infrastructure, invest in a lot of this infrastructure that enables AI, and that's where we capture it all in our Tortoise AI infrastructure fund.
We had a great conversation today about GE Vernova and the energy and how it's the era of electricity investment that's just really starting, and the hyperscale, they were talking about big growth for turbine sales to hyperscalers just across the board, and the company had such a huge revenue beat. It's the widest margin ever. And so we think about how will we get the energy we need, and you moved to some names here that you think, for example, you talked about Evergy and Modine. Tell me about some of these other names.
Yeah, so Nicole, we think at Tortoise that electricity is the new oil, right? So in an AI-driven economy, the future economy being driven by AI, electricity is really going to be the regulating factor. And you mentioned it. So a company like Evergy, who's a large really generator of electricity in the Midwest, in Kansas City, where I live, that's going to be one of the winners because they're going to be able to increase their growth rate as the demand for AI increases even more.
I mean, I guess we continue to need, we're only at the beginning, getting the power. I mean, for example, it was such a joke because nobody could figure out how to power EVs.
Yep.
Now, how are you going to power these data centers, right, that are exponentially larger?
They're getting bigger, right?
Yeah, I mean, it's just the beginning. That's what GE Vernova was saying, and that's the whole idea. What about a name like Modine? Where does that fit in?
Well, Modine fits in that transformation story, right? Modine it's a 100-year company. It's a classic example of what you described as transformation as a result of AI. So they used to provide radiators for big farm equipment, but they've gone from cooling radiators to now cooling racks. So they actually provide a lot of the rack cooling in these data centers that keep all of the hardware inside the data centers cool, right? So it's really an interesting transformation story, and a business that's been around for 100 years.
And then you talked about some of the other names that you still talk about, energy and the AI theme. You have Williams companies and Energy Transfer.
Yeah, well, one of the ways at Tortoise we really think investors really like to play this is get some income, current income, along with the opportunity upside with AI. And so Williams and Energy Transfer provide you some high current income as an investor, but also exposure to increasing AI. So Williams is building out electricity generation that's basically going to provide what's called behind-the-meter electricity in Ohio for the Socrates project for Meta. Williams is actually, Energy Transfer is building the pipeline that's going to fuel this large, massive data center facility down in Abilene, Texas, being built by Fermi America.
Does it even matter to you which way oil goes? Because oil's become very affordable right now.
Yeah, it's good for the consumer, right? It's good for inflation. Oil prices are going lower. We actually think oil prices continue to fall. So for us, oil always matters, but we think that in the future it's going to be natural gas and nuclear.
And when you think about the world of driverless cars and robots, will you continue to invest? Are you bullish in the long run? I mean, I know you said there's definitely ways to play AI, and you gave us so many good ones. Are you big picture bullish on the market?
Yeah, well, I think if AI drives, AI's been driving the market. I think it continues to. That's why we really like these AI enablers and the opportunities there. Because when you think about what AI ultimately boils down to two things. It boils down to you need data and you need electricity. And so we like those two themes. You need data storage devices, network switches, data centers. All of this digital infrastructure is necessary, and that's where we try to capture in our fund.
And with the Mag 7 names that are all due to report in the next few weeks, what are you going to be listening for from those names?
It's all about that CapEx that you're talking about. Is the capital spending going to be consistent? Is it going to grow even more? Already the capital issue highlight is going to be massive, right? We're going to go from $600 billion. Jensen Huang thinks it's going to go to $3 to $4 trillion by a lot of these hyperscalers by 2030. That's massive growth that's coming, and so that's a huge opportunity.
Rob Thummel, Senior Portfolio Manager at Tortoise Capital. Thank you so much for being with us. It's great to see you. Thank you. Good to see you, Rob. Okay, still ahead. We're going to continue to check out these markets and the rebound off the lows. We've certainly seen a lot of earnings momentum. Looking at some of the key names, and the government shutdown continues. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalini. So glad to welcome in Kyle Bergacker, Portfolio Manager at Gradient Investments, to take a look at some of the big picture. I mean, the global trade tensions are back. We're talking a lot about a potential meeting with President Trump and President Xi. And the tariffs at the 100% tariffs for China, they're due to go in place on November 1st. A lot of people think those will get pushed off. The global trade tensions, you tell me, I mean, this is an important part of the story, right?
Oh yeah, absolutely. Yeah, I mean, this is one that we're all keeping our eyes on. It's going to be moving markets for sure. And not only that, but underlying companies, we're in the thick of earnings season right now as it's ramping up, and tariffs are something that we're definitely keeping our eyes on.
What do you surmise? Because the question is whether or not President Trump is trying to just be a little calmer in tone to keep the markets at bay, but we don't really know which way they may go, right?
Yeah, absolutely. I mean, it's at the end of the day, it's short-term noise. There's going to be some volatility. It's a tail that is built into the markets right now. That's why we're seeing a little bit of volatility. But I think, in general, as a long-term investor, that creates buying opportunity. Like it did during April's tariff tantrum. So I think it's definitely one to keep our eyes on as it moves markets. But investing in good, solid companies over the long term, I think that's going to be able to, this is America. Companies adapt, they evolve, and I think tariffs are something that people are keeping an eye on, but will adapt and continue to move onward and upward for sure.
And then at this point now, the government shutdown, we're on day 22. And it certainly doesn't seem like we'll have some big surprise. I think Mike Johnson was supposed to be speaking at 2 o'clock today, but the last few votes, I think we had 11 votes, none of them passed or helped us to move forward.
Right. Yeah, I mean that's another item as well. Like you said, day 22 on the shutdown. At the end of the day, people are seeing some volatility in the markets because of that. A lot of it's just headline risk. This isn't the first shutdown that we've seen. There's been dozens of shutdowns since the 1970s. The longest one being during the 2018-2019 period. I think it was 35 days. So in general, markets since the shutdown, they're green. I mean, S&P since the beginning of the month is up 40 basis points, something like that. Small cap stocks are up 2.5. Gold is up, 10, 11% almost. So, it is an interesting dynamic because it provides a lot of fodder for the media to talk about, but in general, markets are just continuing to chug on, and at the end of the day, people are in general still getting their Social Security checks. People are still getting, spending. That's the growth engine of the economy. So one, we're going to continue to watch, but it doesn't, for us, really change a lot of the underlying dynamics for the companies at hand.
Right. I mean, people are concerned about the labor market, GDP growth, inflation. I guess for right now, while it's the second longest shutdown in history, when does it become a monumental moment? When do we say, oh my goodness, if they don't open it, we're in big trouble. We're not at the big trouble time just yet, right?
Right. Yeah, absolutely. Well, and to your point, there is estimates show a GDP drag of about 10 basis points, 0.1% every week that the government shut down. So eventually here in the next few weeks, as you see those 2 to 3 million government employees start losing out on those recurring paychecks, that will start to eat into growth a little bit. So that's not a great thing. But in general, I think growth expectations for GDP started the year kind of 1.4%, and now they're keeping 1.7, 1.8. So, that shutdown is something we're going to keep an eye on, but,
And now at this point I think you still like some of the banks. I mean, we've seen rates coming down. The Fed is like next week, right? We have a Fed meeting. We're counting here to the days of the Fed meeting at this point. They're in a quiet period, likely to cut again. You like Citigroup and KeyCorp, right?
Oh yeah, absolutely. Yeah, I mean, the banks reported, started reporting last week. Big banks kicked off, and the overwhelming consensus is credit quality trends are very healthy. Loan loss provisions and net charge-offs are way better than expected, and regulatory backdrop is better as well. So when you look at Citigroup, and they are, it's kind of comes down to three things for them. They're really self-help, shareholder focus. They did $6 billion buyback during the quarter. They've got a $20 billion buyback authorization on the books. They probably won't eat through all of that, but keep an eye on the next earnings day or the next investor day for them to articulate what they're going to do there. Super strong balance sheet, tier 1 capital ratio, that regulatory ratio that they're required to keep is 13.2%. That's 100 basis points over the regulatory requirements. So that allows them to deploy capital in this really interesting, optional, flexible way to help them continue to invest for growth. The other more interesting parts of the business for Citi would be digital transformation. I was reading through their earnings call the other day, and the investments in AI is really, really fascinating. So they've saved $650 million worth of expenses throughout the year, really driven by right-sizing the kind of corporate footprint in terms of human capital. And they're deploying AI tools that are now saving about 100,000 hours a week. And it's across 180,000 employees globally, like 80 countries or something like that. So that's just the beginning, but it's actually saving real dollars, and it's becoming meaningful. So that's one to keep an eye on there. And then last but not least, for the banks, the regulatory changes are really pretty interesting. So a couple years ago, I guess financial crisis, so 20 years ago almost, we went from like these layering regulations where it was really process, procedure oriented into now safety and soundness. So to unravel that kind of vague term, it's really a focus on liquidity, capital, and earnings now versus that process and procedure. So the changes really drive a value because now you don't have to have these duplications in these regulatory exams where it's consecutive analysis instead of, concurrent analysis at the same time versus consecutive. So lots of little things to move the needle there for them.
Yeah, and then turning our attention over to AI and semiconductors, and ASML has a real special place, somewhat of a monopoly when it comes to the AI boom. Explain why you like ASML.
Yeah, so they're really the keystone to make all the semiconductors work. They specialize in EUV lithography machines, so that, as you said, powers that AI and semiconductor supply chain, and it really allows the shrinking of nodes and the enablement of AI in general. So as you get more complicated machines and more complicated technology, you need smaller and smaller semiconductor wafers, and without ASML, that doesn't work. It just isn't there. So on top of that, you've got shareholder-friendly capital allocation. They do dividends, they do buybacks. They've got a 12 billion euro authorization renewal, and they deployed 5 billion in cash for that last quarter, and they've got 5 billion in cash sitting on the balance sheet. So everything's looking pretty strong there. In addition to that, that monopoly, that keystone kind of position in the supply chain. And I think what's most interesting is the deployment in new technology. So you think about the NA high machines. So it's this numerical aperture, these high-powered machines that these companies like Intel and Taiwan Semi and others, these fab makers need to actually move to the next layer of technology that we'll see with 5G, with AI, with all of this new technology coming down the pike. And these machines are not cheap. They are hundreds of millions of dollars, and they take years to procure. So ASML has done a very interesting thing since kind of COVID, 2021, 2022, you probably remember. There was a huge supply chain bottleneck where chips were just not available. And to get new technology, to get capital equipment in these facilities, it took years to kind of right-size that process. So in anticipation of the new AI CapEx wave that we're seeing now, it's not just one or two customers, it's really a broadening to more from the very niche group to benefiting more and more customers, and they're using more complicated technology along the way.
Yeah, Kyle, great to see you. Kyle Bergacker, and as we get more advanced, you'll come back with some more ideas too, because that's how it's going to go. Kyle, thank you, Portfolio Manager at Gradient Investments. Still ahead, we'll bring in our panel, talk all about Texas Instruments, the earnings, and it has been under some pressure today, and the chip space overall. We'll be right back.
trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York
back.
Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time.
How did I leave that like that
Stream
for?
Schwab Network at schwabnetwork.com.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way.
Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
So you can't tell me that the fat cats think because Netflix had bad earnings that the whole market's going to tank because of it. Because that stock was way overbought to begin with. So I don't know how you can come up with that kind of definitely went below my support today. $252 all the way up to 1,300 in 3 years. You got to be kidding me. Really, this would be a better price for it, right around 800. Okay, I'm back. I'm having one of them days, man. Started real early this morning, and then the market closing. That didn't brighten my future up too much. And the volatility on these things, from 90 cents, it was at 145 just a second ago, a minute ago. I have a feeling you can make some pretty good scalps. This is the third time we've hit the 63 here at 90 cents. I even put the keys, got the key in the middle of the seat, and I had to go out there and wrestle that thing out. Did I miss any bills? That's my next question. Jimmy's back. Oh, I should see if Tammy was in. Well, that's good news. If I drank, I'd go out and have a beer tonight. Time for some serious trading. If we break the 200, we're going to fly. Prepare yourself. There it goes. 170. Come on, you idiot. Yeah, I've had all kinds of stuff happen today. I was listening to this chick yesterday on YouTube, and she would say what happened to her, but she said, I had 3 great things happen to me today. And this was better than, the third was better than the second. Well, what are they? Tell me what they were, honey. She wouldn't say what they were. She said it would jinx it. I said, come on. What are they? I want to know what they were. And I've had 2, which caused 3 things bad happen to me today. Well, we didn't break it. I was getting ready to take his trade. And I still might. Because we got a hammer. We're squeezing between the 9 and the 21. And the 63's been holding up. And we came and I was busy typing to jump in that trade. I mean, these frickin' options are just unbelievable how they're at 85 cents and they were just at $2. What time is it? It's power hour. I'm going for it. I've been playing it pretty heavy today anyway. I ain't lost a trade yet. dollar. Trading been good. Yippee-yi-yi, yippee-yi-yo. I feel like I'm going to go out and treat myself tonight. Maybe that'll can. They're at 135. Yeah. 360. Blondie. Sheba. Let's go. Don't stop. So YouTubers, if you can count to 4, you might make a little bit more. If you can count to 3, you can trade with me. $4. Yeah. Oh yeah. 490. Oh my God. Whoops, watch my mouth. This thing had just acted up. Bob's bringing good news. Oh, you heard that, huh? Zippity-doo-dah, zippity-day. Let's break this resistance today. It's now 222 here in Missouri. Oh boy. So I'm not the best at explaining things sometimes when I try to get my point across. So I'm going to try it here. So we came down and we hit the 63. This is on the 1 minute. We hit the 63 again. And then we had a triple bottom, and each one of these created a higher high. Each time we broke out, it created a higher high. So at one certain point, it's going to get overextended, or it's going to go ahead and break out. And that's how I come up with a system of 4. So by the time I hit 4, we've already gone past the sweet spot. And we broke out on the third sweet spot. I don't think nobody will explain it to you like this. So you got 1, 2, and just run that straight up. So you have the sweet spot of the channel. 1, 2, 3, 1, 2, 3. That's the sweet spot. And it came back for the 4th time. So I always say, if you can count to 3, you can trade with me, and if you can count to 4, you might make a little bit more. So we got 1, 2, 3, and we broke out of the 3rd time. And we broke out of the 200 SMA and the 200 EMA with an inverted hammer. So this was going to come back down. That's called a gravestone. That's a gravestone doji. Inverted hammer. And it came back and created the 4th time. So this was a sweet spot. And it let you know that we broke past resistance of the triple top. And we broke the 200. This is all on the 1 minute time frame. So when it came back to number 4, you had a hammer. And you had another hammer, which means the buyers are winning. And then all of a sudden you had the big breakout to 490 up here. And I've got 2 more contracts left from $1. And I bought it on the 4th try down here. And these options are like floating from $1 to $2, and then with one candle it dropped $1. It dropped to 90 cents. So I jumped in this thing, knowing that there was a big flexibility in the price from the bid. Now they're at 230. I'm still up, on the last few contracts I have left. So I'm just waiting to see if we're going to have a nice little breakout at the end of the day. This has been a very unusual day. Very volatile day, just like yesterday. You don't want to, it's a scalping time. And when I see measures like this, I'm thinking that the market is overextended. And you've been hearing it from the fat cats right and left. It's like Oracle sitting at the 200 SMA. That thing might have already had its little pullback. I'm going to show you that trade in a second. And I've been waiting for this support forever. So I got to get over the emotions and see if I want to swing it or not and take the risk. So just remember that the sweet spot. It's like I'm trying to say, there's a certain point where it's got to do something, and if it don't, you could get, stuck. And this is at that point. If it keeps going on and on and on, and I always say if you can count to 5, it might take a nosedive. So when I'm thinking 5, if I see 5 touches, I'm getting a little leery. I don't know if I want to be in the trade or not. Now we have a triple top here on an ascending triangle. And that's a bullish pattern. So we still could get that breakout into the end of the day. We got 30 minutes left. So when you get in at $1 and they're sitting at $3, $3.40, that's still a good chunk of change. And I got 10 of them at $1. But if this thing breaks out, each one of these contracts can be worth $500 or $600 a piece. It'd be an extra grand in my pocket. Or I get out now. I mean, it's at the triple top, so you got to make a decision. And the way this market's been all day, boom. All of a sudden you get this big fat knife. I got scared with one of them. I was stuck in that trade, man. I was going, shit. And then the market froze on me that time. And I was down 50%. And I'm going, no. I could have got out even. Did I explain it good enough? I mean, you'll have traders that will let they use AI more or less. They let the computer tell them where the trend lines are. They don't draw trend lines like I do. And chart patterns and using the moving averages. I don't need, RSI is the only thing I have on here. And my moving averages. But a lot of them use different technicals. They have different kinds of. There's 510, 520. And this thing gets up to $6 or $7. I'm up 1,000 more. I got 2 contracts left. I sold 4 here and I sold 4 there, and I left 2 on the table. Oh man. Woo, 620, baby. I'm going to exit. Washboardjim does it again. Oh my God.
Narcissistic Jim, with his ego and his wit, doesn't give a damn what you think of him one day. The market takes a dip, SPX Jimmy will buy. Bitching at Molly, careless to the apple of his eye. Burp it up, Jim, let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Candles on his screen bounce like titties in the night. Birds get so loud the neighbors say that boy ain't right. Polar bear calls it bullets, doesn't matter one bit. Jimmy's face can't wait for Nancy to come and sit. Fart for a dip, ass making noise. Burp for a rip, cheers from his boys. Jimmy is grinding away on his washboard toy. Burp it up, Jim. Let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Lots of fun he has, his ego's ablaze. Burps and farts collide, the room is so amazed. Narcissistic Jim, the legend, the king, playing his old washboard till that closing bell rings. Narcissistic Jim. Narcissistic Jim. Narcissistic Jim.
I couldn't get the chords right that time. Very bad.
key there. G.
Okay. Oh, yeah. Back down to 40 cents. See, some of these have already reversed. It's kind of funny sell-off today. By the way, Magnificent, I went against the trend all day today. You ought to be proud of me. Being in the now. I really should have bought this down here. I felt real good about it. I really feel good about it for a swing, but you're at the 200. So this is what I was talking about earlier. We'll go to the daily on Oracle. And this is a... Now what the hell? What was I looking at? I know I was looking at the daily. Well, I don't... What the heck? Maybe it was the weekly I was looking at. Now I'm confused. Well, never mind. I'm sure in the heck I saw it on the 200. Jib. Now what the... Okay, I just... I saw that at the 200. Huh. Well, there's a couple good lessons I taught today, this week. The fallen wedge, the inverse head and shoulders, and what was the other one? If you can count to 3, you can trade with me. You can count to 4, you might make a little bit more. Is a flurry of circular AI deals a win-win or a sign of a bubble? You know how many times I heard bubble in the past couple of weeks, in the past year? The market's always been manipulated. Always has been. But a problem happened. Retail traders came in and put a wrench in the spoke wheels of them wanting to run the market the way they want to run it. So always remember that. I remember when retail traders was a problem. CNBC especially was talking, well, can you prosecute them? Becky Quick. Because they always, very few of the hedge funds, Goldman Sachs, JP Morgan, Bank of America, they all got in a little back room and told everybody, with the market's a little frothy, let's go ahead and pull it back so we can buy the dip and let's short it. But times have changed. Retail traders has gotten their way. They can't go behind, they don't want to expose their dirty tricks. They thought we were cool because we just traded penny stocks. Now, I know a lot of traders that are out of that stage that were trading pennies. Now they're trading big caps, large caps. Me, I started trading pennies. I did it for 10 to 12 years. And it took Vegas 5 years to talk me into trading options. Now I can't stay away from them. Now that we're at these frothy levels, I'm just trading the SPX and the SPY and whatever comes around in my way on a pullback. And a lot of other millionaires are doing the same thing. They're just trading the SPX and the SPY and the IWM. I know a lot of these guys. I'm in a lot of rooms. That's all they talk about. Some are trying to bring up futures. They're easier to trade, they say. I don't know. I like my strategy. I like how, I ain't had a loss in almost 8 trading days now. And each day considered of, 6 or 7 trades, 8 trades. Today was 8. And I'm applying a little bit more patience. I cost average down on 2 trades today. So, and then I got stuck in that third one because of the blackout, and I lost 50%. I didn't lose. I was down 50%. There's nothing I could do. Then when it broke out, man, I got out of the trade because I was so shook up. I had to leave. So I'm going to get on out of here. I wish everybody a great day. I'm going to go out. I want to go out and eat. So, I'm going to put the thanks all in here because I'm a hick. I'm a cowboy. Thanks all. I got to put the S on that. Thanks. I'm going to watch my video. I've been getting off on watching about these stupid protesters talking about Nazism and fascism. And King, and I don't understand it. Republicans are like the old Democrats right now. The leftists took over the right. I mean, the leftists took over the Democrats, made them almost practically nuts. And there's a lot of them out there. There's a lot of them out there. I mean, I had my share of partying and acting stupid, but I know when I get older, I get a little bit wiser. So I'm going to go on out of here. I wish everybody a great night. Get a good night's sleep. Don't get drunk and drive. We'll catch y'all later. And feel free to ask about my strategy so you can understand it more. I explain it pretty well. And one thing I kind of taught myself in the last 4 or 5 years is try to predict the next move. So if you're at the point where you can start guessing, like, okay, it's going to come down and hit the right shoulder the second time on this inverse head and shoulders, or know when you're going to get in, know when you're going to get out of a trade before you even take it. Or wait. Have a little more patience and wait for that setup. I got in a couple trades too early today. If I just waited a little bit longer, I wouldn't have had the cost average down because they run right where I said they would go. We'll catch y'all later. Be safe.